Oh my gosh, today is gonna be absolutely crazy. It's gonna be freaking crazy for two freaking reasons. Not only do we have the good old CP Dizzles of the eye this morning, but hopefully we can hold on to it like this because it looks crazy. But let's just say I have some sweet out of the money calls on FFI that just went in the money. Woo! It'd be nice to be able to close them, but then again, maybe I'm gonna let some of them ride. This thing's up 93% in the pre-market. It's been a little volatile though. It's been moving basically between up about 30% to up like 110%. It's crazy. This is FFIE. It's like a tiny little company. Yesterday I sent an alert to everybody in the stocks and site group. I'm like, this is like totally degenerate. This company's like $10 million. It's we were joking, like this is worth less than my plane as a company. And you know, the fact that it was up 300-something% yesterday might end up leading to some momentum. So we're like, let's try some, you know, degen YOLO calls. 90% in pre-market? What's that going to do for out-of-the-money calls that just went in the money? I don't know, but we'll find out. But knock on wood, it keeps up. So anyway, we'll see what happens going into CPI here. If you have not yet gotten your Stocks and Psychology of Money group, make sure you are part of it. You get lifetime access. You pay once, you're in forever. Go to meetkevin.com to join it. You get every single one of the alerts that I make. And fastest way to join, literally go to meetkevin.com. Coupon expires today. Well, tonight, like 11:59 p.m. Okay, friends and family and foes, because we know there are some of them out there. Welcome to another CPI day. It is the day that we're going to find out if the good old Q's a doozies, are going to go up or they're going to go down. It's very simple. Right now, they're flat, and they're either going to go up or they're gonna go down. Jason says course has paid for itself twice over. Yes! That's awesome, Jason. Oh, I love to hear that. I joined the group a few years back and I love it. Well worth the money. Nice! Thank you, man. That's awesome. That's amazing. Thank you so much. Really appreciate y'all being part of the group. So let's see what happens today with the good old Qs. If we go moon, the long portfolio is going to be very, very happy. If we go poopy doopy, the shorts on the market are going to be very, very happy. Honestly, I kind of hope that it comes in low. The reason is I'd rather be a 100% bull than like, you know, uncertain, like some money in, some money out. Right? Like I'd rather be convinced. And I want to see that FFIE continue to pump. Faraday futures. Anyway, so I know we're getting a little softness in GME and AMC today. You know, often what I found in 2021 when stuff like that happened, where you get these sort of red mornings on AMC and GME, you just end up pumping later in the day. Now, obviously, at some point, the momentum's going to fade and the price will go down. But it's pretty early for that. 3 days? We're on day 3 of active trading for this stuff. So, you know, I don't know, it feels a little early on some of this. But anyway, pretty excited for the trading day today. We are looking at bond yields already coming in or coming down 3 basis points. So it's almost like, and the market ran yesterday into the close. So it's almost kind of like the market's pre-anticipating that there's some, you know, good news coming for us. So we'll see if it ends up being right, I guess. Here we go, boys. and girls. 15 seconds to go. All right. We are looking for 0.4 on the headline, 0.37 average, okay? We're looking for 0.3 on the core. Here we go. Coupon expires today for the courses on buildingyourwealthmeetkevin.com. And here we go. It comes in low. CPI month over month 0.3. That's 0.1 low. That's good. A match on the core. That's good. Bring the meme rally back. That should be positive to the market. I don't have revisions yet. We got CPI year over year comes in at expectations. You've got at expectations on CPI CPI core at expectations as well for the core year over year at 3.6. Okay, then we've got retail sales. Retail sales come in soft at 0%. So you don't have okay, well, let's look at this. 0% at retail sales. You were expecting 0.4. X auto, you were looking for 0.2. And you got 0.2, so auto was probably weaker again. You've got negative 0.1 on retail sales, X auto and gas. So 0.2 expectations got negative 0.1 on X auto and gas on retail sales. So pretty soft there on retail sales. And then retail sales control group comes in at negative 0.3. And you get downward revisions basically across the board on retail sales. All of the retail sales came in low. You got, the retail sales prior revisions. You got -1, -0.2, minus 0.1, minus 0.2, minus 0.3, minus 0.1 on the revisions. So all the revisions come in soft for retail sales. All revisions slightly down, and then CPI comes in basically at expectations with the CPI month over month figure coming in soft. Expectation was 0.37, and it looks like we got, we averaged down to 0.3. We got 0.37. What did we get? I'm trying to find out exactly what we get. I could run the math really quick. So that was, the actual was 313,548 divided by 312,332. We got, wait a sec, prior CPI 313,548. Oh, there must be a seasonal adjustment in there because that works out to 3.9. And they're saying it's coming in at 0.3, which would be a round down. So the seasonal adjustment must have pulled that down or something. That's interesting. Okay, we'll have to look at that a little bit more in detail. Okay, let's go into the actual report. Oh boy. Oh dear, oh dear, oh dear. Okay, wow, look at that. Faraday futures up 100. That trade is going to pay for all of my hedges today. And then some. I can't believe it's up 100% in the pre-market right now. That was a sweet, sweet trade. I can't. That's exciting. Faraday futures. Now, and the thing is, I hate to say it, I think something like that could keep going over the next days as well, because they just went from like a $12 million market cap to like 24 basically overnight. So it's like this tiny, tiny little micro cap penny stock. Be careful with this kind of stuff, right? But it's just crazy. This is it's 94% short, so obviously this is the kind of stuff that happens with it. But anyway, I sent a trade alert yesterday on picking up 700 contracts on it, and I'm like, let's try it. It didn't really cost me anything because we took some profit on trading yesterday. By some profit, I mean like over $60,000. Yesterday was a good trading day. Okay, CPI 0.3 in April on seasonally adjusted basis. Right, exactly. So we had an adjustment there. So Jay Powell, as expected, was right to give us somewhat of a bullish read there, right? Remember Jay Powell yesterday, he's like, he basically brushed it all off. In my Fed video, I'm like, that sort of implies some bullishness for the numbers today. He brushed off his concerns about inflation. After rising 0.4% in March, the U.S. Bureau of Labor Statistics reported today, over the last 12 months, all items increased 3.4. Index for shelter rose in April. Combined, these two indices contributed at over 70%. So gasoline and shelter rose by 70%. Okay. Indices which increased in April were shelter, motor vehicle insurance, medical care. Okay, these items right here are very lagging, right? Motor vehicle insurance, medical care, very lagging, very normal. This is quite common. Then you've got apparel and personal care. Okay, perfect. Then you've got indices for used cars and trucks. Okay, let me put that, there we go. Household furnishings, operations, and new vehicles were the ones that decreased over the month. Yep. You know, I saw some people yapping on the internet about how, oh, thank you to Tesla for doing the financing offer rather than lowering prices. Now that won't hurt depreciation as much for car values. Bro, it just lowers the value of every other car that's not getting the special APR, interest rate. So no, it doesn't affect. It doesn't help your depreciation. It hurts it just the same, like a price drop would. But it's one further economic step down the road that makes it a little harder for folks on apps. It's a little harder. Anyway, all the items in the index rose 3-4 of those. Okay, fine. Let's go to the deep chart here, because what I love doing, you know this, is we're going to go to the detailed sheet right here by Cat. And you're going to pay attention to the far right number, seasonally adjusted March to April, and then the relative importance on the far left. So far left, far right. All right, ready? We're going to take it all the way to the bottom because this is where our services come in. See this? Other personalized services, 1.1, because we're about to get the core number as well, the super core rather. 1.1 here on other personalized services. That includes haircuts going up, personal care services going up, miscellaneous personal services going up here at 0.9, funeral expenses up, laundry, dry cleaning. These are big gains. Like other personal services, 1.1%. Those are fat movements here. Financial services, we saw that in PPI as well. PPI was led by, in some part, financial services going up. It's all those like fund managers and advisors. I am one. But coupon expires tonight. Prices are the courses of building your wealth go up tonight. That is this, mind you. Sorry. Anyway, residential telephone services, 0.8, internet services. This should basically just say, meet Kevin. See, prices last month, we were nice. It was just 0.3%. Today's expiration's the big one, CPI day. Okay, education and communication services, 0.2. Other recreation, 0.2. Photography, 0.1. Pet services, wow, finally down to 0.5 again. You had 1.0, 1.9 there for a while. Rec services, 0.3. Got public transportation, 0.7. Motor vehicle insurance, 1.8%. That's insane. Think about how high 1.8% is for a moment. What you just do is you could annualize it so you know the speed at which we're going. You just multiply it by 12 and you get to 21.6%, just so you see how high that is. But look at car and truck rental, down 4.6% in a month. That's like a 50% decline in the cost. That's crazy. That's really good. So you get pieces, a little bit of a mixed bag there in the services. That's why I'm waiting for Supercore to come in. As soon as Supercore comes in, it's gonna be great. We're now pricing in more rate cuts, by the way, which is also good news. We now look at the 12-month rate of change here. Good old Nick T has his chart for us. So let's go ahead and pull his chart. Oh, Nick T. He's so reliable on CPI day. Thank you so much, Nick T. Maybe one day we could do one of them interviews together. Just make sure you check out on Stocks and Say. FFI is still pumping. FFIE. Anyway, okay, so 12-month change, 3.6. You've got the 6-month annualized rate. That's fine. So you're multiplying by 2 to get to 4.1, 4.1. And this is the highest. 6-month is highest since July, but you're actually down on the 3-month. So you see the bumpiness. This is the J-Pow bumpiness. So this is why he wasn't so hawkish yesterday. He knew the data, boys and girls. He knew. We just had a little bit of doubt that maybe he didn't. No, he knew. Of course J-Pow had a leak. Rent of shelter up 0.4. 0.4 on owner's equivalent rent. We've got other goods coming in negative 0.1 on other. Alcohol away from home, 0.3. Alcoholic beverages, 0.1. Education comms, 0.1. Toys, 0.4. Reading material, negative 0.4. Nobody's getting newspapers anymore. Got it. Sporting goods, 0.9. Medical care commodities, 0.4. Okay, here we go. Used cars and trucks down 1.4%. And new cars down 0.6. New trucks down 0.4. Wow. See this, by the way, here? Motor vehicle parts and equipment. So I want you to think about this for a moment. When you get a fall in motor vehicle parts and equipment, what do you think ends up going down in the future after motor vehicle parts and equipment go down in the future? Insurance. So insurance is running right now. Insurance is leading some of the inflation that we're getting right now and some of this super core. But this is, it's just going to be a matter of time before it goes away. The question is, the biggest concern in the market, in my opinion right now, is not that at some point inflation goes away. It's that we don't have massive joblessness by the time inflation goes away. That's the biggest concern. Okay, so footwear, 0.1. I don't really care about this so much. Apparel. Okay, wait, what? How does apparel go up 1.2%? That's just some stupid seasonal adjustment. Men's suits are down 2%, but underwear is up 1.6%. This is because all the suits lost all their frickin' money shorting GameStop and AMC, and now all they can afford is underwear. So all the suits went from buying underwear, went from buying suits to buying underwear, because they got smoked. Men's shirts and sweaters, 2.9. Men's pants and shorts. Ooh, well, shorts got a little expensive there. Appliances, negative 0.9. These were your durables, right? When you hear like durables, I want you to think like not clothing, think like machinery, right? Equipment at a factory, a dishwasher, whatever, right? People, cars, people sometimes get confused by that. Just think like, what's a big metal chunk? Although I don't think computers are part of durables. But anyway, let's see here. Okay, so energy, we did have peanut butter down 1.1%. Oh, here's coffee. A lot of people were worried about one of the coffee categories going away. And I'm like, they have other categories for coffee, right? And these are disinflationary categories as well. But wow. Okay, this is very good. So let's take a quick peek here at market reaction. And so we've got, okay, I cannot wait for the market open because these calls that we sent out in the Stocks and Site group yesterday, I mean, we went for 50-cent calls at 28 cents. Now they're at 56, and they're Friday expirations. That's gonna pump. And if that runs during the day, oh, it's gonna be juiced. Okay, see, there they are. I can't wait to see what the pricing updates do. Anyway, so Enphase is up 3% in the pre-market. GME down 12, AMC down 10. Tesla should move up on this. Yep, Tesla's up 2-3. Look at that breakout above the 178. Breaking out above 178 after pricing in more cuts. Good. Let's see here. You've got... Okay, I'm trying to get some other data. Gotta get some other numbers. Let me find out what the rate cut bets are. You bought 250 50-cent calls. Let's go, man. That's freaking awesome. This week is paying for all my bad weeks. Good for you. $101 calls on. Oh, you kept the 100s. Oh, the 100s are gonna pump, or the $1. Good for you. That's awesome. Oh yeah, we're now pricing in 2 rate cuts. 2 rate cuts. Nobody knows rate cuts better than I do. The market now pricing in 2 rate cuts. That's up from about 1.7. Okay, let's see if we have Super Core here. Super Core. Here it is. Super Core comes in at 0.42. Shout out to the zero of the hedge. Super Core coming in at 0.42. And the biggest contributor... Oh, you actually had a negative other category here. And transportation services, again, that's where your motor vehicle insurance is, continues to be one of the hot tamales. So here's your super core right here. Not ideal that it's still this hot. Like the trend here is still not good, right? It's still a hot trend line. Not great. It's just a matter of time for some of these levels to come down. You get your medical care services in here, car insurance in here. Super core is basically core minus housing. So you're stripping out the volatile food, energy, goods. Well, food and energy, you're stripping out goods, you're stripping out housing, and you're basically looking at what's left. This is the very wage-dependent category. And when we say wage-dependent, what we're really saying is, you know, services are provided by humans, at least on this, until we get like an Optimus or something like that. So at least at this point, we still have humans actually working. And in doing so, you as wages go up, you substantially increase your typical core service costs. You know, think about it. I was talking with somebody about this yesterday, and this is not to be anti, Biden. It's just what happens when you first spend a lot of money on, let's say, subsidizing a new factory for TSM. And you throw a few $1 billion at building a new factory in, let's say, Peoria, Arizona. Okay, that's right outside of Phoenix. So what happens in that case? Well, the initial impact of your spending is going to lead to more people being in an area, more spending by those people in an area. Hotel costs go up, rent rates go up, food costs go up, everything goes up. The local hot dog stand has to charge more. Everybody has to charge more because you've just surged a lot of humans into an area where there previously weren't any. So the initial impact of large infrastructure spending is inflation. However, the longer impact is oftentimes deflation, because now you've made more of an investment into bringing costs down. The unfortunate reality is that the initial impact, this is unfortunate for Biden. Some people are like, that's a fortunate thing because they don't like Biden. It's whatever. But the initial impact of large capital improvement projects is more inflation. So yes, ironically, at first, the Inflation Reduction Act is probably going to be inflationary, and only over time will it be deflationary. So that's always very interesting to me, because it's just sort of like an economic reality. But from a political point of view, the only thing that matters in politics is how people feel today. And obviously we know that a lot of people feel quite pissed today. Small business owners, folks watching border or crime or otherwise. But, a lot of these problems have been going on for a while, and I'm personally hoping that somebody fixes these problems. I don't know who's going to fix it, but I want to see it fixed. Anyway, so trying to stay as neutral as possible here. Okay, so let's get a little bit more. So we looked at Nick T. Okay, so still waiting for the owner's equivalent rent to pick up. We know that. That's not news. We saw that at 0.4. We saw the Nick T bumpy, lumpy, trendy. So I think it's worth looking at again. So remember, Jerome Powell has been fighting to be bullish, probably A, because he had this leaked information, but also B, because frankly he's of the mindset of or the disposition of, hey, we might actually end up having a jobs crisis if we don't deal with this as soon as possible. It does look like that is starting to potentially play into Jay Powell's hand again, where this idea of, hey, it's a lumpy, it's going to be lumpy on the way down. Maybe that's what we're seeing. And maybe the second half of the year is just going to drive us down to 2%. We're basically near all-time highs on the Qs. All-time highs, not like year-to-date highs, all-time highs, which is wild. So here's our, I'll write this down really quick, Supercore, thanks to Zero Hedge, Supercore, this is, Supercore is 0.422%, What does that annualize out to? Like, a lot? It's too hot, obviously, but let me do it really quick. So 0.422 times 12. But remember, J-Pow also kind of washed his hands of this. So it annualizes out to about 5%. Recall, we'll write this down really quick. Recall, J-Pow said that Supercore, well, I should say, yeah, Supercore's right. Supercore, the third bucket, does not need to return to 2% as long as all three buckets, goods, housing, non-housing services, average to 2%, right? Between the three buckets. So the flexible average inflation targeting went away, but the average between the three buckets is still in play. Make up your mind, J-Pow. Good lord. Jeez. Okay. Anyway, so what we really need to see now is I want to see the calc, but it's a little tough to calc out because of the seasonal adjustment. So because the number they give you here is the non-seasonally adjusted number. So I'd like to see CPI month over month, get the actual read on it. So the actual number, ooh, I might have it now. Hold on, let's see here. All items, no, it came in at 0.30. Oh, that's good. Is that true? All items, yeah. Wow, it comes in at 0.30. Okay. So, remember, we were looking at, let's write this down, the expectation for CPI versus the report. We had 0.37% expected month over month for CPI, which comes in at 0.30%. So that's pretty good. Now, that was, hold on a second. And then again, now pricing in 2 rate cuts for the year. That was the month over month non-core number. And then the core number came in at 0.3. And we were expecting that to be, let me see here. Core comes in at, 0.3. Wait, let me make sure I'm looking at the right one. 0.3, the expectation was 0.31. 0.31 expected for core month over month. It comes in at 0.30. Okay, yeah. I mean, that's pretty good. And let me look at that one more time to make sure. And then the headline, CPI month over month, that includes it. Yeah, 0.30. It's pretty good. So you can see that right here. We got those 0.30s. And then again, now pricing in 2 rate cuts for December 18th. So I think bond yields, let's see here. We are at the 10-year, we're at 8.8. How's our 2-year though? 2-year comes in at 0.9. Okay. That's good. That's a little smidgen of uninversion there. Smidgen. So that's pretty good. Okay. All right. Let's listen in here for a moment.
Released. And I would take those comments seriously. So there were some very good points made by Wendy and others. They're not going to move their target.
What?
No central banker in the world.
This guy's short and he's complaining that he's not just hedged. He's straight up short and he's pissed.
A new target. They still have to worry about the kind of inflationary pressures that were just reported. They're still too high relative to their target. 1/10 change does not move the needle. It would have to be much more serious than that. And if we look
relax, bro. We just don't want the re-acceleration, you knucklehead. Don't you understand? J-Pow says lumpy. Now, you can believe him or not. I mean, that's ultimately up to everyone individually. But this guy's short and he's bitter about it. Like, Like I had some shorts going into today, but my call option on FFIE is gonna pay for that like many times over, I suspect. So I don't really care, and that was just a hedge because I'm more long. But this guy just sounds like he just like lost his house. He sounds like he lost his mortgage.
Pushing. But I think one of the key points here, and we've talked about this, Andrew, many times, is the government's borrowing schedule. Jamie Dimon referred to this.
Okay, back to that.
We're going to the market for too much. And as a result, the 1 year is still above 5. They shortened up where they're going to be in the bills and notes. The 10-year, on the other hand, the reaction this morning and the way it's been moving the last few days, I think it's been a very pleasant surprise. And that affects mortgages and the key interest rate in the world.
You know who I would rather listen to? The bear that I would rather listen to? Y'all know this one. You ready for him? We didn't get to listen to his freak out this morning. But you know this one because he loves it when the treasury yields go up. He's usually pissed when treasury yields go down, which is going to make this quite entertaining. So that's why, even though this is now old news, we need to go look. That's right. You got it. Far Real knows me by now. Woo!
Now let's go to CPI, shall we? These are the April reads, of course. Headline up 0.3, a little cooler than the rearview mirror, which was up 0.4. I haven't seen revisions. They were late yesterday in coming. If we look at the ex-food and energy, also up 0.3, and last month that was also up 0.4. So that definitely cooling off as expected on that. Now, let's look at the year-over-year numbers, probably the most important. 3.4 is the year-over-year headline, and that is 1/10 cooler than the rearview mirror, equal to expectations. Now let's go to
That was very benign. Very benign. Probably because maybe he only gets really angry when the data's hot. And he's like, I told you not to trust the market. We're going straight to 5%. The market only pre-prices in rates for the next meeting. We're going to 5%, and that's it. This market is delusional. That's usually what we get when we get a hot read. Here, we just got, all right, these are the numbers today. That was like a totally different Rick than what I'm used to. Oh, it's comedy. Oh my goodness. So this is good, folks. This is good. You know, this is J Powell gave us some positivity that this was coming. He was right to. Bitcoin's moving on this really. I mean, we're up at like, I think over 63.5 now. Yeah, look at that run, baby. I'm telling you, this 61.7 right here, that is a risk threshold. And look at the pump we just got. Probably right at CPI, honestly. Yeah, look at that. Look at that pump of dues. You got $1,200 on your BTC the moment the inflation read comes out. Well, within a minute. No, within a minute you went up a few $100. It took about 3 minutes. So you had enough time to get those trades in there. That's pretty good. It's pretty good. Yeah, TMF. Honestly, you know, this is a great place for TMF. That's a good trade right now. You've got yields plummeting. I mean, you just went from like 4.7 to 4.65 more realistically over, you know, about a month ago down to 4.35. That's pretty good. Again, we're now pricing in the World interest rate probability. They call it the VERP. You know, not to be confused with like warp, which would be not to be confused with the lady and her boobs in the portal that got the portal shut down. You know, the New York to Dublin one. If you don't know about that, this is going to sound really weird. But anyway, the VERP says negative 2.04 for rate cuts now. Negative 2.04. That means we are now pricing in 2.04 rate cuts for December 18th. That's well up from like the 1.2% where we were in April when the market took a little oopsie doopsies. Netflix up a bit, nearing a deal for NFL games. Tesla's not holding on to its breakout over here at all. It's probably going to end up back at 178 over here. You've got AMC, GME both moving down. Come on, FFIE, Faraday Future. Yesterday, we in the Stocks and Psych group where I send my trade alerts, we went YOLO on this. And I'm like, this sucker's up 300%. Everybody's going to freak out after the market closes, and then they're going to want to have a slice of this pie. So here we are. My P&L yesterday, people always, they want me to be transparent, which I'm a big fan of. There were two questions people had yesterday, because I pitched the Stocks and Psych course yesterday, since we have an expiring coupon today. And somebody asked me, they're like, Kevin, okay, we know you made $57,000 on the Tesla call yesterday, but how much did you invest? If you invested $1 million into a Tesla call, like that's just like a fart of a movement. And I'm like, okay, that's fair. So I actually posted this on Twitter. Some are asking about the position size of the Tesla call and the strikes. They were 1680 contracts at 66 cents, so about $110,000 in. So just about a 50% return in about 30 minutes. That was on the test. This was on JPOW going bullish. So as JPOW was going bullish, I'm just sitting here going, by God, by God, by God. And what was crazy is I had a DCA into the sucker too, because when I was buying, it was just like dropping. But then once JPOW was wrapping up his talk, it mooned, so that was great. So that led to this P&L yesterday. This is what I ended up with on the P&L yesterday, because I closed some of my hedge yesterday, so I took a 13.7K L on the SQQQ yesterday, but obviously that's offset by some profit I took on FFIE, Spirit, and Tesla. So we ended up 61K yesterday. Again, that 57 was on about 110. And then I think the Spirit move, the Spirit was probably like 25K, something like that. Anyway, so people were asking me about that. They're like, tell us, give us a little more detail on these. Okay, so there you go. Cost, this is interesting. Cost right now is down 17% in the pre-market, along with AMC and GME both being down double dig. Enphase, it broke out above 119. It's coming back to snap back to reality. Let's see here. No, I didn't close all my hedge. Why didn't you tell us you were closing SQ? No, I closed some of it. What I did is, okay, let me be clear about this. I still have SQQQ going into today. But what I did is, so I had SQQQ going out to like June. And so what I did is I said, look, the catalyst right now, the only catalyst right now, until basically the jobs report next month, I don't really think NVIDIA counts. I'll show you what I said. Because I'm still short. I still have SQQQ. But I just trimmed the position. So I'll show you what I said so you could see it. Let's see here. Short-term trades. Oh yeah, I made this giant post yesterday. So okay. Come on. So this is what I have. Okay, right here. So I said last trade, and there's more to this obviously, but I wrote last trade of the day. I'm moving SQQ all to this Friday. I had $60,000 in the triple Q shorts. I realized the big catalyst is Wednesday. So basically I'm moving this to about 27K on the SQQs, but for this Friday. Now, obviously, those are going to lose some money. It's a hedge. That's okay. The other trade I went into was purposefully positioned as bullish for the day. So I have a little bit of a straddle, but it's on a meme stock. So even if we had a bad day on CPI, that could have still held up. Obviously, right now, I think that's going to pay for the rest of my Qs. But basically, I reduced the position after JPOW's bullishness yesterday. And so I moved it all up to a CPI catalyst by calling it a Friday trade. So I'm still going to get tagged on that hedge. I don't want people to think I totally sold out as QQQ. So there's the full transparency. So anyway, so let's see here. You say so the comments are funny. Okay, so then you've got Nvidia. Let's see here. Nvidia's moving up on this. You've got Nvidia. Oopsies. Hold on. Let me go. Here we go. Boom. You've got Nvidia up 1.17%. Can we stop calling it? I like to call it a momentum stock. I generally prefer that, but we know they're interchangeable. I think when you think of them, you should always think of them as momentum. Think momentum, not meme. I think that's generally the way to think of it. But it's basically the same thing, right? I just think one's nicer. And momentum actually implies a lot more. Like, I actually don't think Faraday Futures is a meme. It's moving because of momentum. I mean, it's like crazy. It's a $10 million market cap. Like, it's going to go up or down basically 100% or 50% in those increments because it's a penny stock basically. SunPower getting hosed a little bit here. You're down about 22% right here. Microvision's up 4%. Microvision was up about 28% yesterday. Let's see here. Tupperware, 12%, slumming in the pennies. Janks here is sad he missed out on the FFIE. Hey, man, I'll give you I'll give you a freebie here, okay? You ready for a freebie? Where is it? Where's my freebie? Since you're so complaining here. So obviously I sent a message on my buys in the Stocks and Psych course because that's what I do. I send the trade alerts. So when I see something that I think is going to trend, I send an alert. And it's very simple. And then you can do whatever you want with it. I can't guarantee you're going to make money. The last, like 6 weeks have been obviously very, very, very good. Knock on wood, hasn't been a red day yet. But look at this. I actually tweeted yesterday, right here. Okay, if the 50-cent Friday call options go in the money, I'm space. I don't know why I put 2 spaces. Buying the new iPad. I don't need another iPad. So I guess I'm getting a new iPad this morning. But yeah, follow me on Twitter. I was talking about this on Twitter just because I thought it was ludicrous. I wrote, it's an $11.8 million market cap. Total company value less than my plane's price. 94% short interest. It's just crazy. It's just a crazy market. Kevin, saw your FFIE tweet and it paid off. Buying your course now. I see the vision. That's awesome, Alan Medusa. Thanks, man. Appreciate it. Can I have your old iPad? Nah. You know why? Hold on, I'll show you something. Look what I got. I've been waiting for this moment. I have no use for this. Otherwise, look at this. Hold on. Hold it. Hold it. Hold it. No! This. You see what this is? This is an iPad stand. Look at this. It's like a giant telescopic arm stand with a weight at the bottom. And then, so what you do is you put your old worthless iPads on this, and then you just have them, like, play pictures or something, cute or whatever. Okay. So, where were we? All right. So, Jay. Y'all funny. All right, BTC 63.6, a little bit of a rotation down there on BTC. Enphase 3%. Somebody donated $4.99. Thank you, appreciate that. How do we join Kevin's alerts? You just go to meetkevin.com. That's the easiest way to do it. It's like, I don't know, like in the upper $500 or whatever. You pay once. Like, people think it's like many thousands of dollars or whatever. It's in the like I think it's like under $600 or whatever. But you pay one time and you get lifetime access. Like, people have been in this since like 2019 or whatever, and just sort of keep getting value. Everybody's telling me I'm crazy for not having like a subscription model. I probably am, but that's just always been sort of my mindset of no subscriptions. It's also what I teach. I'm like, stay away from monthly payments. You know, I was talking about this yesterday. People were pissed at me for this. I'm like, you know why you shouldn't finance a car right now? Because if you finance a car at a $700 monthly payment, that is going to eat up your ability to get about $200,000 of purchasing power on a mortgage. So let's say you could qualify for an $800,000 mortgage. You get a $700 car payment. Now you can only qualify for a $600,000 mortgage. The trick usually, and I don't know if it works at 7% anymore, but the rule of thumb, free trick, okay? So if you're like a finance bro or gal, did I tell you I went to a Taylor Swift event with Lauren and a bunch of finance girls came up to me? The conversation went a lot like, hey, you're Meet Kevin. My husband watches you. Anyway, so the trick is you just multiply by 2.34. So if your monthly payment on something $700, multiply by 2.34, that gives you the monthly payment you can no longer qualify for on a house, and then obviously you could run a mortgage calculator to see what that would roughly equal to. But yeah, there's nothing like pretty blonde finance chicks coming up to you and then talking about this. Hey, I'm married too, so it doesn't matter, but I just thought it was funny. Anyway, so SunPower, Cost, GameStop, Tupperware, AMC, Virgin Galactic, Reddit, all moving slightly down today. Let's see here. Amazon 186, and GME sitting here at about 13%. Okay, so let's now... let's see what else we have here. So, Biden's indicated he's willing to debate Trump at least twice before the election. Now, that I would pay to see. Somebody says, Kevin, your thought on... Oh, I'd never dubbed Lauren. Kevin, your thought on the memes today. Momentum. Other people get mad. If you have to kind of... Like, first of all, I mentioned this a little earlier. But first of all, I think that... it's very common. It was very common in 2021 for you to see red days on GameStop and AMC, and people were like, "Oh, it's over," and then they just come rallying right back. So I don't know. Maybe this cycle's just a lot faster, but very frequently this kind of stuff flips. Now I know FFIE's up like. It's bobbing between 110 and 85% this morning. So obviously that's a pretty big move there on Faraday futures. There's a real chance that sucker does it again tomorrow, mostly because it's so cheap. It's a tiny little penny stock, so you have to be really careful when the market caps are this low, right? I usually don't even play in the market in this sort of market cap at how tiny they are, because the risk is like ludicrous. Like I usually trade like Enphase and Tesla because they're usually pretty dang predictable, or some of the AI plays. But I did play Spirit Airlines yesterday. How are they doing, by the way? Let's look at Spirit, because I made some money off of them. I think I made like $11,000 on Spirit yesterday, and it was like a 20K bet. This was okay. It's only up 2.2%. That's crazy, because yesterday it ran up like 12%. I think I caught one of these pumps over here. I didn't go for this. I was over here. Taking like a moving average bounce over here. Thoughts on mortgage, Rocket, and refinance company with 2 rate cuts? Oh, yeah, maybe. I don't know that 2 rate cuts will be enough, but yeah, eventually they'll do well. Rocket Mortgage has come out of the floor. How would you play Tesla today? It depends. It depends how it plays on the lines. What's on CNBC?
You always have to go back to the Yom Kippur War and look about the Great Nixon.
No, there's nothing going on there. Anyway, yeah, that's going to be very interesting. Yeah, William, I post every single trade. Like yesterday, I took a little bit of an L on every trade alert you get the P&L every day. And when I trade, yesterday we were just showing an L that I took on some SQQQ as I de-risked it a little bit. I went from like 60K into like, in the 20Ks in. Let's see here. My computer crashed. Any recommendations on Windows versus Apple? That's like how you pick an ecosystem almost, I feel like. I mean, I have both, right? This is Apple right here. I will say I kind of like what we got over with the the Windows computer, mostly because like if I want to flip on Rust right here, I could just type in Rust and boom, I got Rust right here. I can't do that on Mac. I can't game on the sucker. So what else you got here? Thoughts on Enphase Con? Oh, we'll see. Yeah, it all comes down to the lines, right? I also joined after yesterday's live. Let's go. Oh, Abraham, that's awesome, man. Welcome aboard. Well, I hope you all make money. And if we can kick some butt today here on Faraday Futures, that'll be really cool. But, yeah, what was I going to do? I was just going to do something. I forgot. Anyway. So, wow, I had something at the tip of my mind, but I totally forgot. Oh, well. Okay, let's pop back in over here. Oh, I was going to look at the lines because everybody keeps asking about Enphase and Tesla and that. Yep. So, it really comes down to what's going on. I mean, right now you're breaking out a bit over here at Enphase. I don't know how robust it's going to be. See, Tesla's already having problems in the pre-market here. So it's a little bit of a heads up to you. And crypto, Bitcoin's consolidating as well. This is like a totally loser line here to draw, but I'm gonna draw it red because it's like so weak. It's not even a day trader line here. It's like a pre-market line. But I'm gonna watch that because we did have, we had. Let's draw this a little lower. Where should I put it? It's somewhere. I'm just trying to find the top here, right around there. We got a wick here. We got like 4 wicks over here on the single. If I go to 5, that probably hits 2. Yeah, that pretty much hits on the 5-minute as well. So really, if I want to go really bullish today, I need to see BTC run here. BTC is my omen. It's my omen when I trade. That and the Qs. The Qs are generally an omen as well for what else is going on and such. But yeah, you see this consolidation here. I mean, you're going to get a breakout in either way, right? Like usually when you have this equivalence, like this, convergence, something like this. I mean, this is pretty trashy, obviously. But usually you're going to break up or down, and what direction is a little hard to tell. So we'll see. But the news is bullish this morning, so I can't be too. Oh, that's what I was gonna do. I was also gonna go over here. I can't be too bearish on that. The headlines now are U.S. core CPI cools for the first time in 6 months. Oh, I did not know that was the first time in 6 months. 6 months. First cooling in 6 months. Okay, so let's see here. Inflation-obsessed traders risk overlooking weakening consumer. Right. I mean, that's my lingering concern. Remember, the retail sales numbers weren't that great, right? All the retail sales numbers came in low. Retail sales, all the revisions came in low. All revisions came in with downward revisions. And then we had, what was it again? On retail sales, we had, oh yeah, and then we missed across the board. And then a large miss across the board on retail sales. Large miss across the board on retail sales for April. The revisions are for March. Okay, yeah. Okie dokie. So, yeah, retail sales, mind you, let's write this down really quick because they're actually kind of like an impressive miss. I don't think they're actually getting as much attention right now. I mean, they're on a CPI day. Like, what do you expect? Of course they're not going to get attention on a CPI day. But we should pay attention to it because it is a concern. The consumer running out of money, so to speak, people getting nervous about the economy. Jobs continue to be a concern for me, because that's how you create a recession. Advanced month over month, 0% versus 0.4 expected. Then you had, let's see here, X auto month over month, 0.2% versus 0.2% expected. Oh, so it didn't miss across the board. Mostly misses for April. That was as expected. But then you had X auto and gas month over month that came in at negative 0.1% versus the 0.2% expected. So you definitely had some negativity there. And then if you went for the retail sales control, you got negative 0.3% versus the 0.1%. Yeah, not great. I mean, it's definitely a weakening consumer. So I wonder how like an Etsy's moving on that weakening consumer. I mean, we saw Baba yesterday. In fact, we did a fundamental analysis on the course member live stream yesterday. Yesterday was a lot of analysis. We did Autodesk and Alibaba. Yeah. Don't get me started on the how pissed off I was at one of them. But anyway, Kevin, I owe puppeteer photography. Hey, a fellow peepee. What's up, buddy? Hey, Kevin, I owe $14,000 on my truck. Should I pay it off now, even though I would only have $2,000 left in savings? My plan is to buy a house within the next 10 months. Will this mess me up? You know, I would talk to a lender. You know, obviously not personalized financial advice, but personally, talk to a lender and let somebody look at your situation and say, look, you know, first of all, what are your expenses? Like, are you cash flow positive? You know, if you're cash flow positive, there's less risk in paying down debt and having less standby cash, right? How's your job security? So you have to weigh those things. I don't know the answer to those things. But then you could also talk to the lender to see what the impact of that would be. It doesn't cost you anything to talk to a lender. So call up a lender. Just type in mortgage broker into Yelp. Go, yo, I'm thinking about buying a house. Say 3 months. Don't say 10 months. It's too far out. I'm thinking about buying a house in the next 3 to 6 months, maybe a little longer, something like that. Which could be true. I mean, only say that if there's a potential. But anyway, say that. Hey, could you help me, you know, run my credit and kind of let me know what I should be preparing for, so I'm ready to buy a house. Should I pay off my car or not? And they'll literally work with you for free because they work on commission. So you can literally get somebody for free to give you some advice on how that's actually going to affect your ability to qualify for a home or what. Me personally, I would probably pay it off. Because of $14,000, I mean, my guess is it's probably a higher interest rate on like, you know, a used or something like that, which is good. Like, I'm a big fan of getting used cars. Or you've had it for a long time and you know, you've paid it down that much. So doesn't weakening consumer mean a transition to more value than anything? Yes, it does. So Walmart, Costco, Temu, Alibaba, Amazon, but you have to realize, even if people transition to value, they still net spend less, right? So, you know, I understand the transition to value sort of implies that there'll be more spending. Etsy's a little up today. But if the net spending is lower, then that's not so ideal. So you've got Walmart was down about 1% yesterday. Don't you? Is it Walmart earnings? I think are tomorrow. So, what did Monday.com do? Oh, shit. Monday. Oh, Monday.com's up 19%. And Cisco's tomorrow. Okay, Walmart's Thursday before the open. Tomorrow morning. Woo! That's after the coupon expires. So, let's see here. Another Nick T tweet. Thank you for that. Okay, let me see here. Nick T! April CPI takeaways for the Fed. One good print can't offset 3 unfavorable ones. May take a couple more to get over the PTSD for Q1. Yep. Reduces the risk of any shift to a neutral basis. Right. So this reduces the risk of a hike. Yeah, exactly. Well, I agree with that. So, per Nick T, this reduces the risk of a hike. Yeah, but again, this was very much foreshadowed by J Powell yesterday. I'm gonna write that down too. Here, you can watch me write it if you want. There's no secrets. So, let's see here. Jerome Powell forecast this yesterday by washing the PPI report and hinting at a return to disinflation later this year. So he likely knew what today's CPI would look like so that he wouldn't look like a fool. Imagine, watch this. Imagine CPI comes in mega hot after he's a dove yesterday. He'd lose even more credibility. So I'm almost certain he had the leak. Sounds reasonable. All right. Let's see here. Yeah, see, Tesla's just bleeding into the open here. It's an interesting move. But you know, Tesla doesn't just move off of oh, Rob, you just signed up for the course. Thank you so much for signing up, first of all. Yeah, Rob, just go to lecture 1.0, and then it takes about 10 minutes or so after you go through the steps in lecture 1.0, like the very first lecture in the course, takes about 10 minutes or so. Oh, actually, quite a few of you just signed up. Robert just got a bundle between the stocks and gold course. We got Nia, got the stocks and psych. Matthew, stocks and psych. Brian, stocks and psychs. Adam, AD, Sean, Dalton, Michelle, Ronnie, Ziga, Jasm, Robert. Well, shout out to all of you. Thank you so much. Something that I was talking about, you know, people get pissed at me when I say this too, but I don't care. I'm kind of tired of it. I'm tired of being worried about what people get pissed at me for. It was the climate protesters, right? The Giga Berlin protesters. The Giga Berlin protesters, a lot of people were like, oh, Elon Musk is like, you know, why are these like pro-environmentalists attacking Tesla? Tesla's like one of the most environmentally friendly companies in the world. And to some extent, this is true. Like, that seemed ironic to me as well. And I thought to myself, there has to be more to it. So you could actually go to ehack.com and read this note on it. Below is an excerpt. There we go. An excerpt from the organization protesting Musk. While one of their arguments is that electric vehicles aren't the solution, they prefer more public transportation, which, you know, obviously you could dispute that separately. That would mean you would be anti basically all car companies. But why are they attacking Elon Musk specifically? Well, here you go. Elon Musk's activities are not limited to Tesla. He is also increasingly acting as an actor of the new right. On the Twitter platform he bought, Musk spreads conspiracy theories and I don't even know what that is. Emancipatory, racist, and right-wing content. Is that like emancipation? Emancipatory? Good Lord. What am I in, like 5th grade in social studies? He thus joins the ranks of fragile men who have joined the crusade to preserve patriarchal privileges. He also spreads statements on migration from accounts close to the fascist Alternative für Deutschland. This wouldn't be so bad if he were a wretch without reach or means. But when the richest man in the world supports movements and parties that are diametrically opposed to our idea of a society, that's a problem. Yeah. Now, like, I'm not here to, like, defend them or promote them or whatever. Like, everybody can have their own opinion. But my point is, like, Elon's behavior on social does attract a lot of this negative attacking. And so after I saw that, I'm like, okay, it makes sense. Because a lot of people are like, why would climate protesters attack an electric vehicle manufacturer? They must be the most deranged group ever. Well, there you go. Like, when you actually look at their point of view, it's like, okay, now it makes sense why you're attacking Elon. Oh, the bullish move. Look, this is what I was waiting for. That's what I was waiting for. There it is. There it is. The BT Sizzle breakout. Let's go. Let's go. I know it's a breakout over mostly a worthless line here, okay? I realize that. But what I also realize is it's time. Alrighty, boys and girls. Let's get ready to rumble. Let's see how the cues move and get ready for the opening bell. Oh boy, we got a little bit to go here. A little bit. Let's get it.
The defense, that has historically been the downfall of the country. So Ferguson's a very smart guy. He's written some great. The Pity of War was one of the great books about the economy of war. Fabulous book.
Let's get a look at this open, the big board, the CNBC Real-Time Exchange. It's Pinterest today, celebrating its 5th listing anniversary, and Jim's going to talk to Bill Ready on that tonight.
Yes, and I'm very excited. That company, along with Reddit and even Snap, have changed it. So now you have the big ones that are kind of like ABC, CBS, NBC, and then you have this tier, which could be like TNT. David, it could be like CNN, whatever you want. How is TNT doing? Do you have anything new?
No, I don't. TNT was great to watch last night. I really enjoyed every minute of their programming
the game,
from 8 o'clock until 10:30.
Speaking of which, at the NASDAQ, it's Lionsgate. First day of trading as a standalone content company. And we got all-time highs, Jim, right at the open.
Well, look, I don't like, I don't like huge up openings. I wish things would be cool.
All-time highs at the open. Is that true? Let's see what we got. We got the Qs at 448. Yep. All-time highs. That is true. Let's take a peek here. We've got, let's go flip pages here. You got the Qs of dues up 57-ish BPs. You got Enphase riding the line. You got Tesla coming down. Tesla, what are you doing? Right to the 178 line. Are you serious right now? We need more movement. I don't know why Tesla's moving down like this. We got Enphase sitting over here at what is this? This is 267, kind of stable there. Monday.com's moving. Tesla's barely green. You got the Qs. Qs are trying to show off a little red candlestick right there. Dang. You got Faraday. Faraday has a red candle to start. And let's go to the, let's see here. Yeah, you're about 85, 83, somewhere percent. It was up like 30% in the post market yesterday, so it really had a fat move here. You got AMC running. That's go. Oh, GME gets halted. A halt on GME. Look at that. You've got, let's see here. What else? Alibaba. Welcome to the Hotel Alibaba and Casino from Full House at 60 basis points. You've got Apple at about, rotating down here, 20 bips to the upside still. Nvidia. Ooh, what's the next stop for Nvidia? Well, friends, the next stop is 969 for Nvidia. That's gonna, that'd be quite a move. It could happen. Tesla's down about 0.5%. Holy smokes. Tesla's getting reamed. Apple turns negative. Only 1.6 there. You've got SunPower up 14. You've got Plug-a-Do 7.5. EVgo. EVgo, okay, there's definitely some momentum moving here. Plug Power's moving, EVgo's moving, Lemonade's moving, AMD's moving. Affirm 3.8, Trade Desk 0.88, ARC 2.5, Salesforce 1.5, Coinbase 5% on that push. Look at that. Where's that BTC push? Where is it? Where is it? Where is it? Yeah, that's a nice push for Coin. Mind you, the next stop for Coinbase is 218. So I'm gonna watch Coinbase today on trades. I'm gonna write these things down. All right, we're gonna watch. I still have the Who Wants to Be a Millionaire stuck in my head. 218 Coin. Then we've got what's the other one? Tesla lost the 178. That's not a surprise. The 178 is a pretty toughie. Then you've got Carvana. Ooh, drop on Carvana. You've got drop on Hood here. The 968 on Nvidia. You've got... You might be able to pick up a bounce on some of these. Spirit Air. Spirit's dropping too. So, what about GME, AMC? Let's see here. GME. Oh, yeah, you're halted on GME. Okay, so you got halted. I don't care. Let's see what the halts are. AMC just got halted as well. You've got about 2 minutes to go to get an open on GME. And then look at that move. Holy smokes, man. You're down to, what is this? You're dropping down over here to the 170, what do we got? 175 line on Tesla. That's an interesting position. So I'm going to watch Tesla. And then we've got Enphase bleed. Everything's kind of starting to bleed a bit here, except for the Qs. Those interest rate sensitives. It may not have been enough of a soft CPI read. I mean, I was really targeting for a soft read. I was targeting under 0.27. We got 0.30. So that might be one of the reasons. Let's listen in here for a moment.
Let me add to that. Let's say I obviously am a gardener and I'm trying to figure out whether I want, what kind of tomatoes I want. So I could go to Alphabet. I could go to Claude, my buddy Claude.
Yeah.
I went to Pinterest. And Pinterest had some really good takeouts of what recommended for German, I like these German tomatoes. And then you click, and it takes you to a very good store. It didn't used to do that. And I bought some, and that is a very nice lower end of the funnel. Again, this is what's happening. You get these sites like Pinterest, and suddenly you see the numbers spike. They have 500 million users, and you're able to buy things.
Give me the 5-year on Pinterest since it's
it did nothing. But Bill Reedy came in 2022 with a game plan to make it so it was going to be a very relevant site. And right. It's a remarkable change.
All right, so obviously it's nowhere near the pandemic.
Right, when people are sitting at home dreaming about travel.
Yeah, Tesla's still dropping. You're at about 1.3 now on Tesla, to the downside 1.4 now. And you've got Enphase, kind of getting hit there as well. So not great. Let's keep listening in here.
And Disney had theirs yesterday. Jimmy Kimmel, Bob Iger showing up as well for the first time in quite some time. It's pretty funny.
Did you get it?
Kimmel was great.
Kimmel was really funny.
The bit about bundling.
Yeah.
Bundling is like getting in a sleeping bag with your uncle because you don't want to freeze to death.
What?
And you've seen
that sounds inappropriate.
It's not just churn, it's Chernobyl. You gotta like it. He also came after the new product introduced yesterday by Brian Roberts right here at our parent company called Stream Saver. Remember, that is the combination, we don't really know pricing yet, of Netflix, Apple TV, and Peacock. Thought to be potentially for Netflix, certainly an opportunity for them to reduce churn if they need to.
Getting red candles here on the Qs, mind you, and you're still falling. You're still falling across the board here. Maybe this wasn't weak enough for folks.
Thanks. You're just leaving me out there. At least he laughed.
Well, okay, they're being a little, awkward today. I think we're going to not be awkward, and we're going to go to boring. So we're going to go from awkward to boring. How does that sound?
Already made, especially on certain pockets of goods inflation, and certainly what we're seeing on the services inflation. Is that enough? Not yet. I think we need to see more weakening in the data, especially on shelter inflation, for the Fed to begin to gain confidence.
Yeah. This is why you're starting to get some red here. People are like, it's not good enough.
In what we think is going to be the fall of this year.
Maybe forward guidance doesn't feel that restrictive, right? And corporate earnings are still going gangbusters. We have analysts raising earnings estimates after 3 quarters in a row of profit expansion. It seems like everything's still firing on all cylinders. Where's that restriction having the most effect?
I think the restriction is having effect in terms of, how high we saw inflation get to. And today we're sitting at 3.6 on core inflation. So there have been parts of the economy that have begun to slow down. Even if we look at retail sales just today, we're seeing that control number coming in significantly weaker than expected. And if we look at, to your point, if we listen to earnings call and what many of the consumer focus names transcripts showed, that there is a weakening on the consumer. Now, we have to differentiate between level and change. The level still remains solid. We're not concerned about growth by any measure, but the consumer is slowing down, is softening, and we see that in today's retail sales print, where outside of apparel, every single category showed a fair amount of weakness. So there is impact of restriction, and when we look at auto loans, when we look at credit card delinquencies, you are beginning to see some of those numbers creep up as well, especially for a certain income cohort. So I think there are restrictions in pockets, and we don't want to make that very restrictive for the entirety of the economy and then lead to a sudden slowdown or a sudden shock. The Fed doesn't want that, and we as investors certainly don't want that. So for now, I think this is the accurate and the appropriate policy in the market. And I think the bond markets and the equity markets are a great place for investors to be, given the income that you're earning in the bond markets and the earnings growth potential that you have in the high quality parts of the equity market.
And as you have pointed out, Gargi, in your notes, the bulk of the earnings growth that we see, really huge, has come from the Magnificent Seven, right? If you look at the other 493 stocks,
Magnificent
of 2% year over year. How do you deal with that or how do portfolio managers deal with that?
Yeah, so one of the things that we've been talking about actually since sort of the middle of last year is for investors to focus on 2 things. Number one, moving to active style of management, so having the tools at their toolkit to move around as appropriate when the macro regime shifts. And number 2, we've been talking about investors picking quality in their portfolio, especially in the equity parts of their portfolio. And what we mean by quality is favoring companies that have stable earnings, that have lower debt, and have ample free cash flow. That is what is actually being rewarded in the earnings season. So there's certainly a case to be made that it's not just 6 names or 7 names, that you can look broader for those quality measures, but focusing on the areas of that market that have the ability to keep their margins, that have the ability to...
Yeah, right, because that was one of the problems at Alibaba, was with Alibaba, you got this order or this report that's kind of like, hey, we're kind of getting screwed over here because the consumer has cash, but we think they're going to start spending it, but they're not. All right.
The wrong impression.
Shares of AMC and GameStop reverse course a little in the red after adding $11 billion in market cap this week. That conversation up next. This is Bloomberg.
Yeah. Okay, boys and girls. Look, I'm bullish on this. I don't think this is bearish, but I know people are gonna be like, it's not good enough. Whatever, bro. Whatever. Keep in mind, if you want to see what my trade alerts are, always make sure you join the Stocks and Site group at meetkevin.com. You'll see what I'm trading this morning. And obviously, yesterday we opened calls on Faraday Futures. It's up, 81%. This one moves a lot. and it's very volatile, but and it's also a tiny company. But you've got Enphase over here breaking that 119 line. Tesla's right here on 174. Monday.com 21%. GameStop down 21%. Welcome Christopher or Ortega. Amonth, Austin, Steven, Oscar, Julie, Alan, Robert. Oh, there's Robert again. Thank you so much for joining the Stocks Insight group. We got that expiring coupon code today, so we'll see you in there. Okay, so let's keep moving here. AMC's now down 16%. Let's go averaged. We can see the trend a little better that way. AMC down 16. GME down 19. Enphase getting beat up over here. It's not ideal. We've got the Qs moving sideways. Not very good. Not very good. You'd think the Qs would be moving a little better than this, but they're not. They're getting stuck in the mud. Just like Sleepy. I don't know, another stock. Stupid. Koss is up here at, down at 20%. Baba 72. Apple 187. I really like buying the dip on that one. I was really buying the dip on that one around 168, 169 is a pretty good level on that one. And is Tesla gonna hold on to that line? That's gonna be interesting. Let's see what happens. It's trying to push through a little bit there, aren't we? 174 is pretty big. If you break that on the 5-minute, you're probably going down to 170. But that would be a rough day, honestly, for Tesla. I don't think the numbers weren't that bad. But yeah, Enphase looks like it's gonna go back down to 113 here. You've got the Qs-a-doos. The Qs-a-doos are dropping, though. The Qs-a-doos definitely getting whacked here. So that's an interesting move. I wonder what's dropping them. Is it MSFT? Did you? Oh, yeah, it is. Did you all see left OpenAI? You know, I mean, he left when they had that whole board crisis there for a moment in time. I kind of think he left. And then he only came back to help them finish their fundraise. And then, like, he was going to leave anyway. So I think it was sort of like a handshake deal that he was only going to be around for another 6 months or so. I kind of don't think when he came back, he fully came back. Not unusual in situations like this. Qs, fitty bitties. Up here at 72 on the Faraday futures. Robin the Hood, 19.4. That's an important line right there for him. Oh, Rivian's down 8 today. Wow. A little bit of a reversal there. NVIDIA, I don't think you've got enough action today to really get to that 968. I could be wrong. You'd really have to have some real bullishness that comes out of the market after our first sort of 15 to 30 minutes of trade here. You really have to have a reversal in enthusiasm. So far, I mean, BTC suggests we should have that. Obviously, no guarantees, but yeah, still doing well on Faraday. Expecting some of the options volatility to really start getting priced in within the first 15 to 30 minutes, which is good. Like, if you want to sell an option, you want that volatility to get priced in. So sometimes there's a danger of closing too early. It can go in any way, though. So then you've got Costco, 43 bips. Rivian, Hood, Home Depot. Wow. SunPower, 26% to the downside. What up, leader? Let's listen in over here for a moment.
It's a risk management problem. And, you know, the meme stock community yells about naked shorting and counterfeit shares when short sellers are making money. When short sellers are losing money, they're saying, hey, this is crazy. It's not right. We don't run markets this way. It's a new world. Technicals drive the market. And that's, I think, what David Einhorn was talking about a little while ago. He's saying the flow of money, no matter how it happens, is driving stock prices.
All right, so if Einhorn's on board, does that mean professionals are in this rally, Bailey, or is it still, Wall Street bets? Is this a retail rally?
Well, when I talk to folks who help advise hedge funds, they call out the fact that Wall Street wants to get in on trades. So to say it's strictly retail traders buying the shares, or to Bob's point, shorts covering those positions, when I talk to investors, they really are saying quants are buying it. Momentum traders are getting...
BTC, by the way, moving up again. Here we go, baby. Here we go. Come on, pump it.
Is that momentum traders realizing that maybe this isn't peak, at least for now, and trying to take some profits off the table? Or to Bob's point, I'd be interested, Bob, if you're expecting to see more short sellers piling into that, is that driving shares lower? When I look at the fundamentals and some of the updates AMC's given with that at the market offering, with their debt for equity swap, is that going to provide more fuel for shorts to take positions now?
Bailey, you're onto something very, very, very important. So what we've done at S3 is that we have solved also for the long side of the market. And we can actually anticipate aggregate buying 45 days before 13F is published. And one of the things we noticed this time around is that quant funds, the quant fund cohort, was actually buying meme stocks well before Roaring Kitty actually published his meme. So they were listening to the sentiment in the marketplace and buying. It wouldn't surprise me is that if they were part of the rally as well.
I wonder, we get obviously S3 data on the Bloomberg terminal. Can you see the uptake since 2021? I mean, who's buying or using your short selling data?
Well, that would be the world. That's pretty much everybody that's involved in the financing markets and or shorting a stock. There's over almost 750 firms that actually use our data on a daily basis. Here's the point. The average short sale, short interest to percentage of float across our entire data set is about 4.68. Right now, you have AMC, GME, roughly 20%. I think GME is 25%, AME is 19%. So they're 4 or 5 times the average. Is that extreme compared to 21? Not really.
What were they then?
Things have changed. Well, they were over 100. We would say there's never anything over 100%, but the rest of the world says it's 150%. So the magnitude is not there. But you take quant fund buying, you take the expensive borrow, you take the 4 or 5 times the average of short interest, and the cost of the borrow going higher. That is a tinderbox waiting for a meme to happen. And that's exactly what happened.
Well, Bob, I want to focus on the cost to short some of these stocks. When we talked about Trump media, the cost of that was astronomical. People really paying over $1 per share of short stake in a weekly span. Is the cost to short GameStop or AMC rising? And how does that compare to what we saw back in 2021?
Well, they're nowhere near 2021 levels, but DJT is at meme stock levels in 2021. I think it's 300%. So let's put that into context for the audience. If I was short $10 of a stock, paying 300% to borrow it, I'd be out of my $10 in 120 days. So the expectation of the marketplace is this stock will go down a lot more than over the next 120 days. Otherwise, you've run out of capital to make your bets.
All right, Bob, great to have you on. Hope we can get you in the studio soon. Bob Sloan there of S3 Partners, joining us with Bloomberg's Bailey Lipschultz, who covers these meme stocks for us. I will say GameStop is now traded limit down, off 25%, and the stock is halted. We'll continue to bring you headlines as we get more out of these meme stocks. For some more of the sector price action this morning, let's go back over to Bloomberg's Abigail Doolittle. Abby, what do you got?
Well, we have the S&P 500 up about 0.4% at an all-time high, potentially busting what some people were talking about as a possible double top, speaking about technicals driving the markets, although we don't know that yet. As for sector composition, it's pretty bullish. Most sectors are higher, led by real estate, utility.
Yeah, Zin, I see your question here. Make sure you go through lecture 1.0, and it should happen within like 5 or 10 minutes after that. It's pretty fast, so you should be in. BTC, a little bit of a rotation down here on BTC. You're still above this breakout point, but you've certainly had a nice red movement here. Definitely seen this red here, and it looks like you've really come down on the Qs a good chunk here. You've got Tesla's bobbing around this 174 line right here. You've got the Qs, coming off their all-time highs. BTC trying to roll over a little bit. Spirit Airlines down 4%. GameStop, there it is. Unlimit, you're now at $36 on GME. You've got, let's see here, Baba, 84 bips. Tesla is basically right at the line. Enphase is going straight to 113. Almost certain. It's got a little bit longer to go, but boy, once you break that line, it's not ideal. Wayfair, yeah, look at that. Amazon 2% on that retail sales miss. That's dragging the Qs down. That's what's sort of contributing to the pain. Meta, although Shopify's up, it did come down though at the beginning. I think those markets waking up a little bit to some of those weak retail sales numbers. Affirm down 63 bips, DJT down 97. Yeah, and it makes sense. You've got a very weak retail sales number. It does sort of make some folks probably start waking up again to that idea of like, oh well, okay, what's going to end up happening, you know, to the consumer. Remember, the consumer is 70% of the economy. I think it's easy for folks to forget how important the consumer is because we keep looking at AI spend and not only AI spend, but what's it called? Infrastructure spending, Inflation Reduction Act spending or otherwise. Let's go back over here.
It's just the zeitgeist of the moment. Data centers, we can't get enough of them.
Meantime, Jim, pins tonight?
Yes, pins tonight, and very, very excited because I think Bill Reddy has made this major turn. Remember, I'm saying that there's a couple of winners left. Pinterest is a place to put ads. Yeah. Reddit, and they're replacing TV. That's what they're doing. They're surpassing, they are.
We got another minute or so, guys. I mean, we talked Tesla. I don't know. You notice Rivian's down a lot. I don't know what the reason is, Jim. You also sent me some of the latest data from China,
which is terrible.
Sales that's Tesla related, and maybe one reason why that stock's a bit
that
weak.
Could be the Tesla
Not
numbers
sure
in China
why Rivian is down over 7%.
Well, it did have a little bump
missed that.
there.
Sorry, but maybe somebody else knew.
Look, I think the big question when you buy Rivian is do they have the horses to stay in business? I think that the Fisker situation really got people. Lucid's getting people. I think a lot of people love the Rivian, but you always have to feel like, do you have Tucker? Is it a Tucker?
Tucker, as in the car maker?
Yes.
Yeah. Jeff Bridges.
Right, that movie.
One of the greatest.
Coppola. Yeah.
Was that Coppola?
That was a Coppola movie?
Who's got
Great
a new
movie.
one? Megalopolis.
He doesn't stop.
Needs a distributor.
Fantastic. I just love that.
Jim, we look forward to tonight.
Thank you very
Mad
much.
Money, 6
Appreciate
p.m.
it.
Going to be big. After the break, as we said, we'll take you live to Jerusalem for that interview with Israeli Prime Minister Netanyahu as the...
Ooh, Sarah with Ben? No way. We got to watch that. Wait, but it's probably, we'll probably have to come back because I doubt it's going to be right at 7 a.m. It's never right at 7 a.m. Never. So, I don't know. That's going to be interesting. All right. Let's see here. Come on, BTC. Keep it up, you weenie. Get it up. Stay above the line. Oh, Enphase is almost to 113. Come on, BTC. You can do it. Q's bottoming out. You got the bottom on the Q's potentially right now. You've got, Microsoft's coming up. Okay, here we go. Microsoft coming up. Some green candles there on Walmart. Faraday Futures and that call option we bought, still up 80%. That's crazy. Went in the money. Time to buy an iPad, baby. That's crazy. I promised if it went in the money tomorrow, I would buy an iPad. So and the iPad comes out today, so I guess I'm getting the new iPad. I'll let you know how it is. I thought the odds of that were very low. That's crazy. So Apple, see Apple's recovering here. Nvidia's moving up now. Okay, first about 30 minutes of trade are about done now. So the crazy daisiness of the morning market is over. And we should have a nice little recovery here, little breather. Okay, retail sales, got it. It's not that hard. Let's start getting things going up again. Yeah, Zin, email staff@meetkevin.com. We'll take care of you. Same thing goes for anybody looking to bundle up. That's just staff@meetkevin.com. A lot of people are bundling either stocks with the Zero to Millionaire Real Estate or stocks and the Gold Entrepreneur course. Some people get like property management and they want, YouTube or whatever, or the sales course. Real estate agent sales course is pretty good too. But those are the more popular are stocks, gold, and Zero to Mill real estate. Anyway, expiring coupon code tonight. And let's see if we can make some tendies today on trading. Well, we already started with some tendies on Faraday futures. Offset a little bit by a hedge, obviously, on Qs. Tesla, come on, baby. Come on. What? Break that 174. Break the 174 and run your butt back to 178, baby. Come on. The Qs are moving. Qs are moving up. Trend's up now. And trend up on BTC. Faraday still 70 to 80% up. Apple's running. Nice run, Apple. Today's iPad release day. Google, not really going anywhere. Lucid's down. Marathon's down. Virgin Galactic's down. Where's GME? The GME, where are you? Still halted. Let's see when they're going to pop back open here. So GME reopens now. Yeah, there it is. Right now. There it is. Okay. So, 31%. Hold on. Let me go to the non-average candlesticks. Hey, there's a sign of life. Goodness gracious. And it's gone. God. Wow. Yeah, that's wild. It's almost like Faraday was just like the last of the momentum is almost what it feels like. The last of the Mohicans. What's that from? Maybe the movie called that? Anyway, look at the Qs pump. Let's go. This should pick up Tesla. Did Enphase hit 113? Is it time to go calls? Where is it? Almost! Come on, baby. What? Okay, hold on. 113. Hold on. Where's this sucker? Enphase. Oh, it's been a while. There you are. Oh, no, it hasn't been that long. All right. All right, Enphase. Come on, baby. Oh, there's like no liquidity. What the heck? What's going on with Enphase? Does nobody trade Enphase? That's such an easy one. That's crazy. Oh, whatever. Oh, here we go. Come on, Tesla. And then this is BTC. Yeah, look at those Qs. Move it. I like to move it. Yep. I mean, to get to 168 on NVIDIA, what is that? Or, sorry, 968. 968 divided by 930. You need a 4% move. I don't think we got enough steam to get a 4% move today. That'd be a big old move. Look at you just sit there at the 174. It's so cute. Qs. Already topping out. Halted again. Oh, halted to the upside this time on GME, although it is in no man's land over here. Carvana. So my take is, think about your next catalyst, right? Next catalyst is really NVIDIA earnings. So how do you play NVIDIA? That's the question. Honestly, you probably look at some of the other AI plays, but NVIDIA earnings. All right, let's look here. Let's see what we got. All right. Come on, NVIDIA. What you got? Earnings estimates for NVIDIA. Oh, wow. The average movement is 8.5%. And you're only expecting an 8.7% move. So you're basically sitting right there at the average move on NVIDIA. I'm surprised. I thought you would see a little bit more of a move implied, but I think volatility is just very low right now. Let me look at this. So Nvidia reports in like a week. Yeah, vol's just low, which makes sense because I'm pretty sure the VIX is in the toilet too. VIX, yeah. I mean, you're below trend over here in the toilet. You got a little bit of a spike on the momentum rally. Come on, Tesla. Would you get it up? But Nvidia is a fun one. That's on the 22nd. But after that, I mean, what do you got? I mean, I know you have Walmart and the consumer. Do you get, I think, Lowe's? You're really just waiting for jobs and CPI. It's just going to be a boring couple weeks. You know, to CPI and retail sales is so big. Q's taken off right here. All-time highs. Bitcoin still holding this nonsensical breakout line that I drew. Oh, hey, you didn't, it's supposed to go to 113 before you start pumping. The red line was somewhat close. Anyway, BTC up a little bit. Is Sarah on yet? No, Sarah. I wanted to see Sarah. You know, to understand what she was going to ask Benjamin, of course.
Whereas on the other side at 4.5, then I think that you're in the value zone. So I'm looking at those, the broad range, and how I come to that is that I think that R star has gone up over time, and I would look at nominal R star as 3.5 to 4%. Throw on a term premium, and it gets you to 4.5.
No. Not a chance, man. Dude, we are so full of adrenaline right now in this market with the AI spending, defense spending, and CHIPS Act spending. We are so pumped full of adrenaline. Our star hasn't gone up. If anything, watch. It's going to end up going lower. I personally think you have a high likelihood of, and I've said it before. I said it starting last year. I said, mark your calendar for 2033. Give me 10 years, and interest rates will be lower than they've ever been before in America. I still believe it, and that's why you want to buy real estate. It is your best hedge, in my opinion. That's not it's not personalized financial advice. You're allowed to do broad-based financial. Anybody can do that. You just can't personalize it. I think that's fair. Okay, what else? Oh.
Spending softening a bit?
Not sure if there's reason to fret because we were stronger than horseradish in March. But we will pay attention to it because we're picking up, in the economy, the fact that the affluent are doing incredibly well, whereas the lower half of the income distribution is being pinched. And so I think it's appropriate to look at it and not dismiss what happened in the most recent month, but also in the context of what happened in March.
Are you a fan of the theory that easier policy would help housing supply and then help inflation? Sort of the Goolsby school?
I can argue that one both sides. It's like the issue, would lower interest rates be good or bad for housing? I don't know. I mean, all of my students who are around 30 at Georgetown, we talk about it all the time.
Sure.
It's the whole issue is if rates come down, is the price of a house going to go up so much that I am not benefiting from that by the time that I get out of here and get my...
Inventory is going to go up. Inventory is already rising substantially. We've been calling this forever. This inventory rise, and rates come down, inventory go up.
Affordability.
Even more.
Homeownership.
The dream of homeownership is still very much alive and well. The act of implementing on that dream is what's daunting.
Right. I mean, and even if we have an adjustment in rates downward, as seems likely, let's call it over the next 12 to 24 months,
absolutely,
we're not going back to zero.
We're not going back to zero. And housing prices are not going to come down. We had that huge leap during the pandemic. So you're up here and you're not coming back down. And actually lower rates, as you're discussing, could push that up. So in some respects, that generation is thinking in terms, is this thing going to always be 1 week in front of me? Am I ever going to catch it? And I think that's a real issue in our society of my generation, of the baby boomers versus the millennials. I think that's a big issue.
You mentioned the boomers. There's been a lot of good work done on this sort of pig in a python lump of money that they have and are continue to grow in markets and home equity and everything, and that will support prices for the next 5 to 10 years, right?
I think that's broadly right. I think Ed Yardeni's done some great work on that, and I think that's broadly right.
Just says BB coming soon. I kind of want to see the interview, but I'm not going to wait for the whole hour for it.
Is if I can't ever get into the house, then I need Bank of Dad and Mom to step up a bit.
Speaking about beefs, and we had Yardeni on with us yesterday, the other thing is you guys have created an enormous amount of debt and deficits. I haven't heard you weigh in yet in terms of interest costs, which we're talking about a lot for the federal budget and what that looks like. A concern to you?
I analyze it and look at it. I'm not as wrapped around the axle about it as a lot of people.
Wrapped around the axle. This guy's talking horseradish and axles, like straight out of South Carolina. That's kind of cool.
Not just transfer payments, but increased public investment. Then it increases supply side potential in the economy and therefore makes the debt more manageable. So why you have the debt really matters for me, or why you have the deficit. If you got public investment, then it's less troublesome because it increases supply potential, it seems to me.
Paul, it's great having you on set.
Good.
Please come back soon.
Good being here.
Paul McCauley. Let's get to our Sarah Eisen in Jerusalem on the back of that important interview this morning. Hey, Sarah.
Hi, Carl and David. Good to see you. Yeah, here from Jerusalem, where we're just outside the Prime Minister's office, wrapped up a conversation with Prime Minister Benjamin Netanyahu at what is a critical point in this war. He shared some new information about the invasion in Rafah with Israeli troops on the ground there, about the timeline for this war, and about the relationship between the U.S. and Israel right now. Have a listen. Mr. Prime Minister, thank you so much for taking the time.
Thank you for coming.
There are reports now that the Israeli army is advancing into Rafah. Can you just tell us the state of play and what the plan is at this hour?
What we're doing is what we have to do to win this war. We have to destroy Hamas's fighting formations. They have 4 terrorist battalions left in Gaza. We can't leave them there because they'll reconquer the Gaza Strip, set up their military power again, and they vowed to commit these savage murders again and again and again. Again, the beheading of women, the raping of women, the kidnapping of children, the burning of babies. They promised to do it over and over again, so we can't let them get away with it. And the way to prevent it, a necessary way to avoid it, is to destroy those remaining terrorist battalions. So we're doing it. We're doing it carefully. We're evacuating the people. Up to now, 500,000 people have vacated Rafah, evacuated safely. They've got out of the fighting zones because we asked them to leave, and we're going to complete the job. They go outside of Rafah, or outside the fighting zones. They move away because that's where we asked them to move. Hamas is doing everything in their power to keep them in harm's way, including sometimes shooting them if they try to leave. We do everything in our power to get them out of harm's way. Millions of text messages, phone calls, leaflets, and happily they move. It's important.
Do we expect a full-scale invasion, and what does that even look like?
I think what you're seeing is a responsible step-by-step action that we're taking, and the most important thing is to enable the civilian population to leave. That's been our basically our modus operandi from the beginning. That's why if you actually look at the ratio of civilians to combatants killed in this war, it's one of the lowest. It's perhaps the lowest in urban warfare's history, modern urban warfare, contrary to the reports that I heard. By the way, I heard the UN readjusted after 7 months its assessment of how many women and children were killed. Everyone is a tragedy, by the way. For us, every civilian killed is a real tragedy because a life is lost. But for Hamas, it's a strategy to increase the number of civilians killed. But nevertheless, we've achieved much lower numbers. And right now, we're doing this with very low civilian deaths, and I hope it continues.
Well, and yet there is this perception in the world that you can do more to protect civilians in Gaza.
Well, no army has done more in history, and I don't say that. I mean, I do say it, but the one who says that is John Spencer, Colonel John Spencer, who's the head of urban warfare at West Point. He says that no army in history has gone to the lengths that Israel is going to prevent civilian deaths, losing the element of surprise, enabling time for the enemy actually to organize itself for the coming attack. But we do it because we do care about civilian casualties. And we're faced with a challenge that no army has faced, because you've got 35,000 terrorists holed up in a dense environment, 50 meters above ground sometimes, and 50 meters below ground in terrorist tunnels. And yet we're able to do this because we're committed to it, and we'll continue to do it.
There's also a report today that the U.S. administration is pushing to release $1 billion of weapons aid to Israel. Can you confirm that? And do you have a sense of when that will happen?
I hope it happens soon. Look, I appreciate the help we receive from the United States from the beginning of the war. President Biden came here. He sent also these battle carrier groups, and we got weapons. Yes, we do have a disagreement on Gaza, rather on Rafah. But we have to do what we have to do. And, you know, sometimes you just have to do what is required to ensure your survival in your future. We cannot continue into the future by having Hamas retake Gaza. It's not only would be a tremendous victory for Hamas, it would be a tremendous victory for the Iran terror axis, because Iran is trying to envelop us with a noose of death, of which Hamas is one component. And that victory is a victory against Iran. It's a victory for the moderate Arab states who are not openly, but who understand that their future is involved also with our victory against Hamas. So we are doing what we have to do, and I hope we can see eye to eye with the United States. We're talking to them, but ultimately we do what we have to do to protect the life of our nation and to prevent such savageries from being repeated again and again and again.
Is the U.S. withholding the heavy bombs, the 500-pound, 2,000-pound bombs?
Yeah, so far it has. I think that's out in the public. I hope we can overcome that. But I said, look, I said on Holocaust Remembrance Day, which is just a few days ago, I said, I appreciate the American help, but I can't allow Hamas to threaten us with this mass murder. And indeed, if they could, they would have done exactly what happened to us 80 years ago in the Holocaust. There we were completely defenseless, and they murdered 6 million of our people, a third of the Jewish people in the world. Hamas, if they could get away with it, they would do the same thing. The reason they can't get away with it is we push them back, but we're not going to leave them there. No one would. Would the United States leave an enemy right at its border, not thousands of miles away, but a few hundred yards away from its border, after it committed the equivalent of 20 9/11 massacres on one day, 50,000 Americans killed on one day, 10,000 held hostage by these criminals? I mean, it wouldn't happen. You know the United States wouldn't do it, and we wouldn't do it either. So we have to do what we have to do. And I paraphrase it, a nation's got to do what a nation's got to do. And today we can.
But can you win this fight without American support?
Well, the answer is yes. Although we value American support, we want American support, I'll do everything that I can to get American support, but not at the expense of our survival and our security. When we have to, we stand alone. And against these savages, we have to win. We don't have a choice. But you know, Ben-Gurion, our first prime minister, declared the independence of the State of Israel against American opposition. Secretary of State Marshall, at the time, opposed the independence of Israel. And actually, America imposed an arms embargo on Israel at the time. Yet, Ben-Gurion did what he had to do. Prime Minister Menachem Begin in 1981 destroyed the Saddam Hussein's atomic bomb factory in Iraq, because that bomb was aimed to destroy Israel. And Ronald Reagan, the president at the time, slapped an arms embargo on us. He withheld F-16s, I think, for 3 months. But we did what we had to do. And over time, people see that, you know, you do what you have to do. Sometimes you have disagreements, but they recognize that those decisions were the right decisions. And I think they'll recognize over time that the decisions we're making now are the right decisions too.
How's your relationship with President Biden these days?
I've known him for much more than these days. I've known him for over 40 years. And, it's been a friendship that is often laced with disagreements. President Biden said it openly, and I say it openly. But it hasn't blocked the friendship. But at the end, I'm the Prime Minister of Israel. I have to take care of the one and only Jewish state. And I hope to do it as far as we can with agreements, but sometimes we just have to do, even when there is disagreements, we have to do what we have to do to assure the survival of the state of Israel.
Did it factor into your decision or calculus at all with regard to going into Rafah, the U.S. threat to withhold weapons?
It factored in, but it wasn't a decision that I made lightly. I respect the United States. I respect the American presidents, whoever is in power, and certainly Joe Biden, and that's not an issue. But the responsibility is to do what you have to do to secure the future, to secure our basic security. So I do what we have to do, and I hope that we can iron it out. In fact, all the disagreements we had over the years, including now in the Gaza war, this is not our first disagreement, but ultimately we overcame it. I'm sure we will this time too.
The administration has given you higher grades on the disbursement of humanitarian aid. What took so long to get that aid flowing in?
Well, for one thing, Hamas was looting it and still is looting it every day. Hamas and others are looting it. So we get the aid into Gaza through multiple crossings that we've opened, through land routes that we opened, sometimes through airdrops that we've facilitated. And now we're trying through a maritime route that actually I initiated. So our policy from the start, from the beginning of the war, my policy was you have to provide the basic humanitarian aid that is required by international law. But in the last 6 weeks, we actually changed it, not merely to providing basic humanitarian aid, but flooding Gaza with humanitarian aid. And we're doing that. And right now, the difficulty we have, two difficulties actually. One is Hamas is looting. And the second is that one of these crossings, the Rafah crossings, we want open. We want to see it open. And we certainly want Egypt to release, to make sure that maximum humanitarian aid flows through this crossing and other crossings as well. And I hope we can come to understanding with that too, with Egypt.
When for Rafah?
Rafah yesterday, if we could. I mean, that's not our problem. We're not holding up the opening of Rafah. I hope Egypt considers what I'm saying now, because I think it's good for, nobody should hold the Palestinian population hostage in any way, and I'm not holding them hostage. I don't think anyone should.
As far as the war,
we're fighting not the Palestinian population, even though many of them supported the massacre. We're fighting the terrorists embedded in those populations that Hamas is using as human shields.
And you mentioned there's 4 more battalions left. That's why you're targeting Rafah. Mm-hmm. Because I was going to ask how the war is going. We're seeing the return of Hamas in some of the northern cities that you had already conquered. The hostages have not been returned. So is it really going well?
Well, half of the hostages have been returned, and many didn't believe that we'd get that, and we'll get the other half. I'm committed to getting all of them back. And it's heartbreaking to see what is happening to them in those terror dungeons and what is happening to their families. So Hamas is very cynical, very evil. And we are fighting sheer evil. I think a term that President Biden used, and it hasn't changed. They were sheer evil, they are sheer evil. But how do you do that? How do you fight them? How do you defeat them? The first thing to understand is that they're not just a terrorist organization, they have a terrorist army. It has organized battalions. That's how they have command and control structure. That's how, if you don't destroy the battalions, then a commander, a Hamas chieftain, can order 1,000 people to do this attack or that attack. So you have to smash those battalions. And after you smash those battalions, which we've done in other places, you have to come back and mop up, which is what we're doing in other parts of Gaza. It's not over quite until you first smash the battalions. How long does that take? Well, I said a few weeks ago, it takes a few weeks to go into Rafah. We are in a careful way to allow the evacuation of the population. But the intense part of the fighting, the smashing of the battalions, is just weeks away. It doesn't take that long. After that, yes, you'll have continual action, but at a much lower intensity, much lower scale, mopping up the remnants.
So it's a matter of weeks until this is over?
The Rafah operation, if continued as we plan, is a matter of weeks, not months and not years.
And then what after Rafah?
Mopping up. sustain. You really need three things to finish this thing. One, you need a victory over the organized fighting formations. Then you have mop-ups. Then you have sustained demilitarization to make sure there's no terrorist resurgence, because they're still trying to regroup.
And that's happening, right?
Yeah, no, that's happening now, but we haven't finished destroying. The chieftains are still there. We killed. We got rid of two of the four commanders of Hamas. Another two to go. We'll get them. Okay, we won't rest until we get them. So you've got to get the chiefs. You've got to get the battalions. Then you have to mop up. All of that we're acting now to do. Once that is over, you have effectively the end of the war, certainly the end of the intense part of the war. What do you need then to reconstruct Gaza, to have a different future, so Gaza doesn't pose a threat to Israel anymore? You need to have three things. One, sustained demilitarization, and that I think can only be done by Israel intervening when it can, when it sees another terrorist resurgence. The second thing you need is a civilian administration that is not Hamas and not beholden to the destruction of Israel. And I think that can be done with the assistance of Arab countries and the international community. And the third thing you need is reconstruction. That I think can be done with the help of important players in the international community. But you've got to clear Gaza of Hamas. You can't have a future for Gazans, for the Palestinians in Gaza, or a future for Israel, or a future for a broader Middle East peace if Hamas emerges victorious. And if it's undefeated, it emerges victorious. That's a tremendous victory for them, a tremendous defeat for all of us. What do Gazans, what do Hamas, what do they want? What do they chant? They chant death to Israel, death to America. What does Iran want that sponsors Hamas? Death to Israel, death to America. And by the way, their supporters in the United States on those campuses, they chant the same things. Death to Israel, death to America. Unbelievable. Now, I know that doesn't reflect the vast majority of the American people. When asked, who do you support, Israel or Hamas, 80% of Americans say they support Israel. 20%, it's still a huge number, say they support Hamas. It's the same 20% that when polled say that bin Laden was right. So they hate America. That's why they hate Israel. They don't hate Israel because of America. They do actually. They don't hate America because of Israel. It's the other way around. They hate America because they hate Israel. They hate the whole idea of democracy, liberal societies. They view us all as, colonial implants. Colonial implants. We're here in this country. We're sitting in this city, which King David declared as our capital 3,000 years ago. So, I think everything is spun in the other way, but we're fighting for the truth and fighting for our future, and we'll continue to do that.
Because there are questions about what happens after and what Israel wants to see, whether Israel wants to occupy Gaza, and who you really want to see operate in that power vacuum. What should it look like?
It'll be a power vacuum. First of all, it shouldn't be a power vacuum that Hamas is controlling, because that's not a power vacuum. Those who tell us stop the war now, leave Hamas in place, leave those 4 battalions in Rafah, are basically saying enable Hamas to regroup, recapture Gaza, and threaten you again. That's not going to happen. So I think what I'd like to see is a non-Hamas civilian administration there with an Israeli military responsibility, overall military responsibility. That's the only thing that would work. But there's one precondition. The day after Hamas is the day after Hamas. The day after Hamas is destroyed. You can't have it both ways. You can't leave Hamas there and talk about the day after, because you're not going to have a day after. You'll just have a repetition of these same horrors.
Can you talk about a 2-state solution after you remove Hamas?
Look, the 2-state solution that people talk about is basically would be the greatest reward for the terrorist that you can imagine. 80% of Palestinians in Gaza and in Judea Samaria, in the West Bank, support the savagery. Giving them a state would do 2 things. One, it would be a tremendous reward, a historic precedent of giving those people who committed the worst massacre against the Jewish people since the Holocaust on a single day, giving them a prize. And second, it would be a state that would be immediately taken over by Hamas and Iran, and it wouldn't advance the purposes of peace. It would just be a launching ground for a future war against Israel. I think that that's not in the works, and most Israelis by now, a huge number, would say, don't do that. I would argue that if we defeat Hamas, we should strive for something that I've long believed we can do in the Middle East, and that is have the populations, the Palestinians, have all the powers that they need to govern themselves, and none of the powers that could threaten Israel's survival. And that means that the military responsibility in the Palestinian areas adjacent to Israel would be left to Israel. Otherwise, Iran comes back in. You know, we left Lebanon, Iran came in with Hezbollah. We left Gaza, Iran came in with Hamas and Islamic Jihad. If we were to do that a third time, the same thing. So that's not good for the Palestinians, it's not good for Israel, it's not good for peace, it's bad for the world, it's not good for America. I think this formula that I say, the Palestinians should have all the powers to govern themselves, but none of the powers to threaten us, that's the right thing. And that, by necessity, means that certain sovereign powers, the most important one being the responsibility for overall security, is maintained with Israel. I think that's the realistic solution.
Is the U.S. withholding intelligence about Hamas leaders' whereabouts?
I don't think so.
Because there was a report that they were in an effort to keep you from invading Rafah.
No, I don't think that's true. Anyway, the main intelligence on Palestinians, and believe me, in a much broader radius in the Middle East, is we have by our own. And of course, we appreciate the intelligence cooperation. America often helps us. You should know that Israel always helps America with a lot of intelligence that saves American lives in many, many parts of the world, and especially here in the Middle East. Israel is a valued ally of the United States. I don't think America has a better ally than Israel, and I believe that Israel has no better ally than America. Doesn't mean we don't have disagreements. Do you have disagreements in your family, Sarah?
Of course.
Yeah, so we have disagreements in our family, too.
You mentioned Iran, and it does raise this question of the never-ending war, and that is, how do you stop all of this without stopping Iran, which is funding Hamas and Hezbollah and others?
Well, I think you're right. I think ultimately we have to. We have to confront Iran and prevent it, not only from closing on this noose of death that they're trying to put around us, beginning with Hamas, Hezbollah in Lebanon, the Houthis in Yemen, and their radical Shiite militias in Iraq and Syria. They're trying to envelop us and choke us. Well, we're fighting back, beginning with Hamas in Gaza. But this is not merely our battle, it's also your battle. Because if they were to achieve, if they could knock out Israel, they got the Middle East. And if they got the Middle East, they're going to be going right after you. They say it. You know, they chant death to Israel, death to America. They want to develop, and this is the worst part, not only conquering the Middle East, which we're preventing them from doing, but also developing intercontinental ballistic missiles tipped with nuclear warheads that could hold any city in the United States hostage. I don't think you want that. So confronting Iran, rolling back Iran's aggression, preventing it from getting nuclear weapons is not merely Israel's interest, it's America's interest. It's the interest of all the moderate Arab states who understand, like us, that they're endangered too. But they're just endangered in regime change. They'd throw them out and put their own puppets there. In our case, it's not just the government they want to destroy. They want to destroy the country. They want another 6 million Jews dead. It's close to 7 million, I'm happy to say we have now. Not happy to say that they'll be destroyed. They won't be. But if they could, that's what they would do, and we won't let them do it.
So where does that leave Hezbollah? Because 80,000 Israelis are evacuated or displaced from the north. How likely is it that we see a war on the northern front?
We're committed to having them return. They left because of Hezbollah's rocketing, gunfire and so on the border. We're committed to have them back. We either get them back without a military action, through diplomatic efforts, or with a military action.
By September?
Well, I don't want to announce dates, but I think Hezbollah understands that we're not going to allow this to continue.
So there is a diplomatic path there?
Well, it depends on Hezbollah. They have to understand that the alternative is very bad for them. I don't think they want to. I think many were surprised by the strong response that we gave to the Iran axis, terror axis in Gaza. And I think Iran was surprised by the failure of their weapons to penetrate Israel. They were sure that they would penetrate, and we were grateful for the American and international assistance in this. But the main thing was Israeli technology and things that I can't talk about that prevented this. But it is also purported that we were able to surprise them in other things. So I think no one should underestimate the resolve of Israel to defend itself or its ability to do so, least of all Hezbollah.
What about your own resolve? There is a perception that you are prolonging this war for your own political power.
Yeah, well, I'm not concerned with my future. I'm concerned with Israel's future. I read the other day in an esteemed American paper by an esteemed journalist. He said Netanyahu wants the war to continue because if it doesn't, and he's taken out of office.
A lot of people feel that way. Go to jail, even.
Yeah, his trial would resume. Sarah, my trial has been ongoing since I resumed office. In Israel,
there's no
elected
immunity.
prime ministers do not have any immunity from prosecution. Happily, this case is unraveling. And a few months ago, the judges called the prosecutors in and said, you really should drop your chief charge, the bribery charge. The judges are telling the prosecution that. So I'm not worried about the trial. I'm worried about Israel's trial and tribulations. And I'm going to do what I have to do to finish this war. And as far as I'm concerned, we could finish it as quickly as possible, but we have to do so by finishing the war, by winning the war. That means destroying those battalions.
Do you have the support of your own people? Because we are seeing protests by the thousands demanding a deal where they release the hostages no matter what.
Well, Hamas, anybody who says get a deal at any price means basically capitulate to Hamas. What does Hamas say? Hamas says, you can have the hostages, maybe, by the way. You can have them, but you have to stop the war, end the war, get out of Gaza, and leave Hamas in place and let them basically reconquer the Gaza Strip, from which they would commit these atrocities again and again. We can't agree to that. That's what people have to understand. But I will not relent on trying in every way possible to get those hostages back. And when we defeat Hamas, we'll get them back. And I think we'll get some of them back before. That's at least what I'm trying to do, to achieve.
But do you still feel like you have the mandate from the Israeli population?
The people don't lie. I mean, you could go in the streets and you could see the vast support that is there. You won't know it because, everybody's fixated on these protests, which are financed, organized, and so on. But they don't reflect the majority of the people any more than the mobocracies in American campuses, these protesters, these mobs. Do they reflect the majority of the American people?
No.
No, well, it's the same thing here. The majority of the people here support a victory. They want to see a victory. They want to see Hamas removed because they understand that their very future is online.
Well, at least I hope not. On the protests on the college campuses, growing anti-Semitism, even beyond the campuses. I wonder what you think the security threat is to American Jews right now.
It's quite serious. I mean, I'm talking to my American friends who are Jewish, and they're saying, we never saw America like this. And I'm talking to my non-Jewish friends who are saying the same thing, and they're equally troubled by it. But I think it engenders an opposite reaction. I was so deeply moved the other day when I saw, these protesters, if you want to call them that, were burning American flags, and I think in a university in North Carolina, they took down the American flag, hoisted on the flagpole a Palestinian flag. And then American students, other students came in, they took down the Palestinian flag, rehoisted the American flag, and then stood around the flagpole to protect the American flag. And I was so deeply moved because these people really understand it's our common battle.
What about the economy? It's definitely taken a hit as a result of the war.
This is a pretty in-depth interview she got here.
Turn that around without being able to give a specific timeline about when it ends.
Well, I think on the contrary, I think that the hit we've taken is relatively small because we have a very robust economy. I led the free market revolution here 20 years ago, which made Israel a technological powerhouse in the world. People are investing now, and if they're smart, they'll go now, because when we win the war, we also win the peace and win the economy. And people understand that. I'm having people come in here who say, we want to make Israel the hub and an AI leader, or one of the 3 leaders in the world. It already is. We're number 4. We're number 1 in per capita investments in AI, number 1. But in absolute terms, in a country of just 10 million, we're number 4 in absolute terms in investments in venture fund investments in AI in Israel. But I think we can go a lot further. Israel is a robust innovation society. And the future of economies is based on technological progress and on AI. We're committed to doing this. And I'm telling your listeners right now, your audience, the time to come into Israel is now, because we're going to rebound huge once this war is won. And you should be there, not at the ground floor, but don't wait to get at the top.
The rating agencies are cutting. They're worried about the deficits and the military spending.
Yeah, is that right? Yeah, well, I'm telling you, I heard this before. I was finance minister here in the early 2000s. Nobody wanted to invest here. We had a terror intifada, you know, and all that, and people didn't believe it. I said, look, we're going to do a revolution here. Israel is going to be transformed from a semi-socialist economy into one of the most robust free market systems, technological countries in the world. And I said, invest now. I don't think they believed me because they didn't. But those who did made a huge fortune here, huge fortunes. There are many billionaires in Israel. But I'm saying this now to you and to your audience.
It's also gotten very
It's recorded. Here it is, Sarah. It's recorded. I'm telling you, Israel will be one of the most advanced technological societies, and among the three and perhaps among the two AI economies, leading AI economies in the world. That is worth a lot of money. Be part of it.
So, Mr. Prime Minister, you have been among the most vilified leaders in the last few months in the world. There is threats of prosecution from international courts. How are you dealing with all of this?
Well, I'm dealing with it because I'm not here for myself. I'm on a mission. And the mission is to protect the future of the Jewish people. And the Jewish people can only have a future if there's a Jewish state. Yes, we're imperiled, but we have the resolve and the spirit to fight back and to win. I visited yesterday some of our wounded veterans, lost limbs. It's just unbelievable what they say. You know, they say, we're waiting to be fixed with an artificial leg because I'm going back to fight with my friends, with my colleagues, because we have to win. And that spirit is so powerful. It's so powerful that I don't think anything can I know nothing can stop it. And what I'm telling you is that when I think about, you know, the vilification, the slanders, the lies, and the absurdities that are leveled at me, I don't think they're leveled at me. They're leveled at the country. And I'm not an outlier. I don't represent my policies or the policies of the extreme fringes in my government and all that ridiculous spin. I represent the broad majority of the Jewish people in Israel, and even many non-Jews, the Arab citizens of Israel, who understand that our common future is on the line. We have to win. And if I have to take slanders and vilifications, so be it. It's not the first time.
I think your father lectured until age 100. How long do you plan to be prime minister?
Not until the age of 100, please. It's not. Look, I don't plan to be here. It's not my plan. It's what the people of Israel want. And so far, they've vested their trust in me because I reflect what they believe is the essence of our being. We have to ensure that what happened in the Holocaust doesn't happen again. That the peace that we've begun to form and that I led in the Abraham Accords, that it's broadened. It will only be broadened with Saudi Arabia and others if we win. If we lose, nobody will be interested in us. Victory is essential both for survival, for security, but also for peace and prosperity. You make alliances with those who win. You don't make alliances with the losers. And that's why, among other things, we will win.
Speaking of the Abraham Accords, are you in touch with Donald Trump?
Not recently, but I think he sent me a letter of congratulations when I was, when I was elected.
So not since October 7th?
No, but, I have always appreciated the support that he gave. It was very, very important. Supported us on recognizing Jerusalem as our capital, moving the embassy here, recognizing our sovereignty in the Golan Heights, and getting out of what I thought was a disastrous Iran deal. And I appreciate all of that, just as I appreciate the fact that we received the support we got from President Biden. I think ultimately the American people and the presidents of the United States, they look at the situation here in the Middle East and they say, who stands with America? Who stands for the same values that America has stood for? And the answer is Israel.
Mr. Prime Minister, thank you so much for the time today.
Thank you.
Really appreciate it.
Wow. It's quite impressive of a length of an interview there, Sarah got. Let's listen to her summary.
There, as far as what the Prime Minister said. First of all, Carl and David, the way he framed this Rafah operation, which is coming despite the resistance and opposition from the U.S. and Europe this morning, with the EU's foreign ministers telling Israel to get out immediately. He says we have to do what we have to do, framing it within the context of this larger existential fight that Israel is waging against Hamas, which, as he said, has promised to do October 7th time and time again. As far as the news, he said the Rafah operation will take weeks, and then next steps, he frames it as mopping up some of the terrorists that have returned to the northern cities, like we are seeing happening and like they are doing, and then talks about eventually a vision for Rafah, for Gaza beyond that. But guys, I thought that was an important point. I thought also just marrying Israel's fight with the U.S. and the fight for the West. I thought he came back to that a number of times and really wanted to hammer that point. And that was that Israel and the U.S. are very close allies, need each other, despite what he says is this disagreement. And what he confirmed is the U.S. withholding some of the heavy bombs as Israel has proceeded to enter Rafah.
Yeah, Sarah, and he pointed out, of course, disagreements from the past, right back to the founding of Israel, not to mention President Reagan's opposition to the bombing of the nuclear reactor in Iraq. He's obviously a very effective communicator, Netanyahu, and that was certainly came to the fore during your fascinating interview. You know, I do wonder the plan after, whenever the after is, continues to be a real question. You obviously asked about it. I don't know if you were satisfied with the answer, because it doesn't appear that there's a great deal of detail, at least available publicly or from the Prime Minister right now, about what things really do look like, other than what seems to be a continued military presence of some kind of Israel on the Gaza Strip.
Yeah, I think he was pretty forceful on 2 points. One, this whole two-state solution that we hear about from leaders in the West, like President Biden, he frames as a reward for the terrorists who have backed terrorism, and events like October 7th can't do that. He also said that it has to, whatever the future is, it has to be a demilitarized Gaza. He did not, David, rule out the possibility of other Arab nations coming in to support. I know that there's great hope that, for instance, Saudi Arabia might play a role in any kind of normalization with relations with Israel, and whether that could be part of the package deal. But again, I think that those are the steps that they're thinking about, but the task at hand is those 4 remaining military battalions for Hamas. Richard Engel joins us now. He's NBC News' chief foreign correspondent. He's also in Jerusalem, just across town near the Old City.
All right, we're not going to get to another interview here. But, okay, that gives us some insight. I was not expecting it to be that long, honestly. I thought a presidential interview with Sarah was going to be like 5 minutes long. I think, honestly, she got like 20 minutes. So, I mean, honestly, good for her. That was a killer interview. So I'll probably make some form of a summary update video on that separately. For now, we've got to go through a little bit of a summary on CPI, and then we're going to jump into the course member live stream. So we'll talk CPI, we'll talk inflation numbers, and retail sales, and all the other good stuff. So let's do that. Let's get ready for a little bit of a summary here. Now, yes. Okay, just once, and then we'll get into course live. Obviously, we're live a little bit longer here today, but that is news. It happens. Okay, and before we get into the summary here, remember that today is the expiring coupon code day for the courses on building your wealth. Any of them, if you want to bundle up, email us at staff@mekevin.com. And if you've got any questions, you can email us there as well. As far as those of you signing up, thank you so much for joining this morning. Stocks and Psych at the moment is the most popular. A lot of people bundling with the real estate one, but shout out to those of you who just joined. Really appreciate it. Joey, Matthew, thanks so much. Piotr, Vishvajit. I'm definitely messing up some of these names, but anyway, thanks so much for joining. Really appreciate you. Okay, let's get into a summary here. So let's see here. Okay, let's just push this button here. And then we will go ahead and do the summary. Max is saying, what's going on with Cart? I don't know what's going on with Cart. Oh, Instacart. Oh, yeah, all of a sudden it's just tanking. Oh, that's a good call. Let's see here. Instacart. Take a quick peek a look. Instacart. Let's see here. Actually, don't see anything on it. That's just probably, honestly, it looks like a lack of volume over here. It's just a giant hole of volume. Volatility index down 4% today. Look at the Qs, though. What a run on the Qs. 89 bips on the Qs right now. That's pretty remarkable. That's a pretty remarkable run there. Okay, so let's get into it. Okay. All right. Okay, so this, got it. Okay. Yes. And where did I put the Qs? There they are. Okay. Okay. There we go. Well, Jerome Powell's leak was received. We got a CPI report that broadly met expectations. If anything, came in slightly less hot than expected, and it was met with relatively weak retail sales numbers. In fact, markets, while they might be enthused that we're not sort of getting this second wave continuation of inflation, if anything, the weakening of the consumer is putting some weight down, some pressure down on some stocks, some consumer stocks, auto stocks, durable stocks, you name it. Obviously, what we've noticed in this CPI report, much like the others, is that some of those core good prices are driven by some items like motor vehicle insurance, medical care commodities, and financial services, kind of like financial advisors raising prices for financial advice or whatever. These services are some of the usually the last in a later inflationary cycle to really start seeing a boost of inflation. And we're starting to see that, or we've seen that come through over really the last 6 months here. The question is, when is that going to roll over? Well, there's some good news. We're starting to see new cars, used cars, and car parts come in substantially more negative than what we've seen at any point in over at least the last 3 months, which is actually a good thing because usually insurance lags the declines in actual costs that go into insurance, like car repairs. And what you end up getting is an eventual decline in, or at least stabilization in insurance prices again, which hopefully then Jerome Powell will be right in his belief that the second half of the year is going to drive the largest amount of disinflation. Now, obviously, what that means for the stock market and housing market is, well, TBD. Consider for a moment that as the market is now pricing in 2.04 rate cuts, it's worth remembering that what you really need is substantial rate cuts before you get a jobless recession. And that's unfortunately the real concern, is that these retail sales numbers that came in right here, that we got a substantial miss over here by about 40 basis points. We got a match on the X-Auto. We missed. We went negative on retail sales. We shrunk on retail sales, X-Auto gas. And on the retail sales control group, we also shrunk 0.3% compared to the prior month versus the 0.1% expected. This is, again, that sign of that weakening consumer. It's very similar to what Alibaba told us yesterday, or over the last couple of days in their earnings report, where Alibaba told us, hey, we know people have capital saved and they have the ability to save or to spend, but the question is, are they going to be willing to spend? And that willingness to spend is really coming under question. And so today's CPI numbers, inflation numbers, they really scream to us, hey, look, we're not getting this crazy second wave explosion of inflation. we are seeing that lumpiness that Jerome Powell has regularly told us, hey, if we get the lumpiness, we'll trade sideways, we'll hold rates steady for longer, and we'll just be patient for really that second half of the year where we expect inflation to roll over again. Now, whether or not it actually does remains to be seen. We still need owner's equivalent rents to roll over. Super core is still pretty hot. When you annualize it, it's still 5%. Now, Jerome Powell's already started trying to soften that. We've seen Jerome Powell say, hey, we've got 3 buckets of inflation: goods, housing, and then non-housing services. We don't actually need all 3 to roll over to 2%. We just need them all to average 2%. This is sort of the new fate, I like to call it. Remember, Jerome Powell got rid of flexible average inflation targeting. It was about 3 months ago that he killed the idea that we would care about flexible average inflation targeting. This was actually quite disappointing. Jerome Powell suggested that the only reason we had flexible average inflation targeting was essentially to manipulate us to believe that the Federal Reserve wanted inflation to go up from the about 1.75% where it was before the pandemic. The pandemic changed things, led the Federal Reserve to believe that maybe the neutral rate of interest is higher, and therefore we need higher rates for longer, and so therefore fate is dead. But Jerome Powell's bringing in this sort of new fate, and the new fate is, hey, did you get your expiring coupon code today for the programs on building your wealth? I hope you did. Anyway, email us at staff@mekevin.com if you need to bundle up for those. But really the new fate is, hey, we don't need every single one of the 3 buckets to actually come in soft with inflation. We need them all to average down to 2%, and it'll be bumpy. It'll take time. We're willing to be patient. Fine then. But do we have time for that patience, especially when a consumer that makes up about 70% of the economy is kind of starting to roll over a little bit? Well, this is where we have to look and say, okay, what's going on with the jobs market? And that opens up our next catalyst. On June 7th, we are going to get our May jobs report. That'll be our next big catalyst, is June 7th. We are starting to notice sales at companies like Etsy, Starbucks, McDonald's, Home Depot. All of these are starting to roll over. Comp sales are turning negative, retail sales negative. A lot of folks are saying, oh, but people will start going to value companies. Like maybe they'll shop more at Walmart as opposed to more expensive stores. Maybe. But the reality is, what you're finding at a lot of companies like Starbucks or McDonald's, for example, McDonald's specifically, is it's not just that people are spending less, they're also showing up at the stores less often. So in net, yes, while they might be chasing value, you're starting to see an economy that's really pushing spending down, down, down. The retail sales numbers today reiterate that. So while it's exciting and it can be fun to be bullish about, yay, inflation isn't running away, remember, one report does not make a 3-month trend. And even though we had a 3-month higher trend for the beginning of the year, even Jerome Powell said, hey, 1 quarter is not enough. So you really, and this is what he said previously, what you're really looking for is data that shows disinflation for 6 months in a row. What happened at the end of last year was fantastic. We really had disinflation from June through December, and you had excellent support from the Fed suggesting, hey, we can actually get to cutting. There's a reason we went into this year expecting 7 rate cuts, because inflation felt like it was solved. And then we got that second wave, indicating, no. We're going to have to wait longer. We're going to have to wait even longer than 6 months of disinflation to really start betting on real rate cuts. So what does that practically mean for us going forward in our portfolios? Well, overall, until the job market turns, it's probably neutral to bullish. I don't think this is as bullish as a CPI report as we could have gotten. The bullishness that I was talking to course members about was that we would get a CPI report that came in less than 0.27. What I do is not only do I send out trade alerts, but sometimes I'll send out trade ideas. And so I put together a CPI trading plan, and I said I'm looking for CPI to come in under 0.25, and we got 0.30. If we got under 0.25, I would have been enthusiastic about substantially more purchases in the stock market, call options. we ended up getting more of an ad expectations read, and that's leaving me a little more soft on wanting to say, yes, this is the signal to go all in. I think this is optimistic, or we should be cautiously optimistic. Obviously not personalized advice for you, but this is not bearish. We could have easily gone super hot like what we had last time, but in terms of yesterday for PPI. But keep in mind, when they revised PPI down last month, of course the month over month is going to look higher this month. But Jay Powell washed that yesterday and gave us a big hint that today's CPI was probably going to come in either soft or at expectations, and that's exactly what we got. So I think we're in a place of cautious optimism, and I hate to say it, but while the report doesn't make us more bearish, it probably leaves me more like 55 to 60% bullish as opposed to 50% neutral, or like, 10% bullish, which would be more like 90% bearish, right? So I look at this as relatively neutral. I don't know that this changes too terribly much. I'm down to go for some calls. This is not like a heavy kind of call day. This is not like oh my gosh, I need to go all in sort of positioning. This is relatively neutral, and I hate to say it, but it basically just means we need more time. And I hate saying that because it just feels like every report that's coming out is the next most important report. But we kind of honestly keep kicking the can down the road. The current pricing for the world interest rate probability, that is an indicator of how much we think rates are going to fall in December of 2024, sits at about 1.92. So we're at about a 1.92 rate cuts priced in for the year. Currently, we've seen bond yields drop as well. Bonds down about 7 basis points on the 10. And then on the 2-year, just to see where that inversion is sitting, you're down about 6.4 basis points. So you're not falling as much on the 2 as you are the 10, keeping that inversion relatively alive, which is still that bad omen of what's going to come. Well, probably what's going to come is we're going to continue to see real estate inventory rise. I think that's going to create a lot of opportunities to buy single-family real estate later in this year. I think there are opportunities now to buy multifamily real estate. And I look at being defensively positioned where maybe you're diversifying a little bit more. For example, if we got, let's just be real, if we got like a 0.1 on CPI, you could basically just yeet into any single interest rate sensitive stock and just YOLO to the moon. But I don't think that's the environment we're in right now. I think this environment that we're in right now, it just makes sense to sort of broaden your portfolio. Again, not personalized advice, but usually in uncertain times, I like to diversify. And when things are just going like straight up or straight down, I like to concentrate. So when we're going straight down, like January of 2022, I'm like cash. When you're, March of 2020, V-shaped recovery, okay, we're going to get the money printers like crazy, Fed emergency cuts rates to 0 on a Sunday, you just go all in directionally on concentrated bets in the stock market, right? That does really well, just like cash does really well when things are plummeting. But in times like now where we're kind of toppy, right? The Qs are at all-time highs. They're at the QQQ sitting at 450. It's literally at an all-time high today. I mean, zoom out on the week chart. Let's jump in right here. You can see it. You are on the Qs. You're at all-time highs after the CPI report. And what that does is it tells you that maybe concentrated bets aren't the play right now, but diversified plays are the play. Diversified plays are like ETFs that give you more exposure to various different asset classes, or maybe not necessarily asset classes, but different either sectors or different verticals, consumer discretionaries, durables, AI, whatever it might be. So in these times where we're toppy, I like to be a little bit more diverse. I consider ETFs better than single stock investments in environments like what we're in right now, especially with the Qs being this toppy. But then again, I don't blame it, because if you go to the previous top of about a 404, call it. I could actually just read it off exactly here. The previous top was, these are the average candlesticks, so it'll mess it up. Let's just go 404 on QQQ, at about 30% for inflation. 525 is really where your inflation adjusted top is. So I know it feels like we're at a top right now, but inflation adjusted, we're probably, frankly, over here. So Next big catalyst to pay attention to, you've got expiring coupon code tonight, 11:59 p.m. for the courses on building your wealth. Stocks group is the most popular, along with Zero to Millionaire Real Estate Investing in the Entrepreneur Gold course and Productivity course. Then you've got the jobs report on the 7th. You've got NVIDIA on the 22nd. 8.7% expected movement on that stock to either direction. Volatility is honestly pretty low right now. I think the markets are just sort of chill right now, which does set you up for potentially a negative catalyst taking a big hit or creating a big impact. But we're looking for those catalysts, and really, I mean, outside these two, NVIDIA and then jobs, then you're sitting on June 12th looking at CPI data and the Fed. But until then, it's like, okay, cool, we'll get like Walmart earnings tomorrow. Big deal. So honestly, this just feels like a time where you've got some cash, you're diversified, you're ready to go in either direction. And that's sort of my positioning right now. I don't see this as screaming enthusiasm. Now, Nick T did indicate actually pretty much the same thing. Nick T came out and suggested that this reduces the risk of a hike, but it doesn't really give us much clarity on when we're going to end that higher for longer time frame. So as the first cooling that we did get on super core inflation in 6 months, which is nice, especially since we've been on a sort of this uptrend. And again, we're still sitting at 5% on super core. So there are reasons to be nervous. Retail sales, super core, inverted yield curve, jobs market rolling over. But there are also reasons to be optimistic. Declining trend in inflation, return of balance in the labor market. Here's your declining trend. Your 3-month annualized rotating back down. 6-month annualized is also rotating down. It's actually over here. It's about 4%, so it's actually a little higher there. But the overall trend is still down despite this little pop here. And the 12-month is continuing its trend down. So this is it. It makes sense why Jerome Powell washed the CPI report basically yesterday with his preview. If he didn't, let's say he was an uber bull and the CPI report came in hot, it'd certainly make him look like he's going to lose even more credibility compared to what maybe he even has left. And a lot of people aren't very optimistic about Bowie. But anyway, yeah, look at those Qs there on the day. It's almost straight up. You did have a little bit of a dip, and once you bounced off the moving average, it was basically straight up. You're almost up 1% on the Qs. So pretty remarkable movement here, all-time highs on your NASDAQ. So we'll see how the day goes. Volatility down, Bitcoin up nicely. You can take a look at BTC, sitting at 64.5. I had a breakout line drawn this morning, and while we almost retraced to it, we are very clearly trending up right now. So I think there'll probably be some optimism going into the close. Yes, consumer spending down, but today looks like we might be setting up for some optimism going into the close. Really waiting to see what other negative catalysts there might be. So there you have it. Thank you so very much for watching. Let's go ahead and play the outro.
Just close the fucking door. Close the door.
Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker. Yep, there you have it. Take a look at this though. Wayfair, after its earnings, really took off from about $50 all the way up to about $71. How long that'll last, TBD, but you have noticed that over at an Amazon, for example, as well. Amazon topping out at about that 188.65 level. Let's see if it can end up passing and breaking through on this. Anyway, folks, there you have it. Thanks so much for being here, and we'll see you in the next one. Coffee.